This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, and Michael Barr on a deep assignment here after the Lions have lost. Lisa Mateo with us as well. That opening that Ken, our global technical director, made, that was far too optimistic. I mean, it was a bullish opening.
It was, exactly. So, but just looking at futures here, Tom, I mean, got a little bit of a red on the screen here. Not too much. Just S&P off about 0.25% here. Looking at WTI crude oil sitting right here at $70 a barrel. I filled up the Beamer a couple days ago, $2.75.
$2.75
a gallon. Yep. So
do you take the BMW into the Wawa?
No, we do the BP station on Route 35.
Station,
yeah, so they take care of us.
Lord Brown's happy.
Yep, exactly.
About that. We say good morning, folks. Sort of day two of a really interesting correlated market. That'll be one of our great themes today. The basic idea here is interest rates glide up a little bit, curve steepening. Very importantly for the pros, 10-year real yield, wow, 2.10%. Every tick there is like a bigger deal than a nominal yield, like what you worry about your 30-year mortgage. And 2.10, it's ebbing up. And, there was that headline. We got to get Sebastian on here. I mean, let me see if it's on the top page. T. Rowe Price raises prospect of 6% treasury yields on fiscal risk. What does a 6% yield do to Lisa Mateo's world?
I mean, it's not good. I'm looking at the 30-year mortgage here, 6.67%. It's come down to just a tick, but it's way higher than I think people thought it would be, given that the Fed supposedly is cutting rates. So.
Dollar strength. I mean, if we get a 6% yield, Drew Mattis is going to get his first gray hair. He'll join us here in a moment. We say good morning to all of you out on YouTube. Subscribe to Bloomberg Podcast. Is our new distribution. Discover YouTube, Bloomberg Podcasts, and we're there, Bloomberg Surveillance. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures falling. This is following another record close for the NASDAQ 100. That was thanks to big gains in the tech sector, also on hopes for another interest rate cut from the Federal Reserve tomorrow. Later in the week, with the focus shifts to the Bank of England and also the Bank of Japan. We have NASDAQ futures, little change, down 13 points. Dow futures down 0.3%, 166 points. S&P futures down 0.2% or 15 points. The 2-year yield, 4.28%. That's up 2 basis points. And the yield on the 10-year, 4.42%. And that's up 2 basis points. To currencies, the Bloomberg Dollar Spot Index is little change. The yen snapped a 6-day losing streak. Right now, it's up about 0.1% and 153.92 against a dollar. The euro is weaker. The British pound stronger. Bitcoin at above 106,000. Crypto-linked stocks. I want to check in with those. You have Coinbase up 0.5%, Mara Holdings and MicroStrategy both up more than 1%. Shares of NVIDIA continue to fall, down more than 1%. The stock closed down 1.7% yesterday. Wall Street really waiting for more evidence on how it can ramp up the sales of those Blackwell AI chips. Meanwhile, Broadcom, they're up more than 1% after closing at a record high yesterday, jumping 11%. And just popping up, Pfizer forecast 2025 revenue in line with projections. Shares are up about 2%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. I think this needs to be said. Drew Mattis will understand that we've got to do this. I'm going to the Bloomberg terminal, folks. I'm looking at Pfizer and I use the Pfizer vaccine. I mean, I've got an affection here for Pfizer. From the COVID peak, Pfizer is down 58%. Yeah. From the COVID peak. Yep. Talk about the past. Drew Mattis joins right now from MetLife, and he's got a blistering note out. There's no other way to say it. Drew Mattis, you say simply the Fed is wrong. You cut right to the chase, and you say this morning at 8:30 is what matters. What happens this morning at 8:30 that Chairman Powell really needs to lean into?
Well, I think if you look at the Bloomberg consensus, what's going to happen at 8:30 this morning is we're going to see that the U.S. consumer is still in this ball game. And not only are they in the ball game, but they're hitting pretty well. And so you have to ask yourself, if equities are doing so well, the consumer's still in the ball game, inflation's above your target range, why on earth are we cutting interest rates right now? And I think that that's something we have to really consider is, is the Fed making a policy mistake? And if they are making a policy mistake by cutting too quickly or continuing to cut too quickly, how do they reverse themselves in the future? Do they just pause for a longer period of time? Or are they going to be, like some people are out there saying, or are they going to have to reverse course? And I think the more they cut rates now, the more likely it is they're actually going to have to reverse course later.
So what do you think the Fed is focusing on here? Is it the labor market, Drew? Is it inflation? Because inflation seems kind of sticky here in this last 100 basis points or so.
I think they've got tunnel vision. I think they think that most of the inflation pressure is something they can't really deal with. Now, that didn't seem to matter when they were taking rates up to 5, plus. It didn't matter to them at that point because then they were like, oh, inflation expectations matter. And now, what I would encourage them to think about is, exactly who are you cutting rates for? Another 25 basis points isn't going to make the housing market miraculously start working again. It's not really going to do a huge amount for consumers who don't need the help anyway. Why the rush to get back down to your neutral level with inflation still too high? This is a case just like with the balance sheet where he said we're going to reduce the pace in order to kind of extend the length of time we can actually kind of reduce the size of the balance sheet. This is a case where they should follow what they're doing with their balance sheet and maybe reduce their pace so that they can get a few more rate cuts in. Because at some point the economy will slow. You will want these rate cuts to be kind of moving through the system, but maybe this is a little too fast.
All right. So given that backdrop, Drew, what's the kind of the MetLife 2025 outlook as you talk to your clients?
Well, so we're looking for the Fed to cut rates down to 4%. Now that's, maybe agnostic as to what they do today, but, I think neutral is around 4 for the Fed funds rate. We expect 10-year yields are going to kind of stay where they're at. 4.25-ish, or maybe a touch higher. We're not looking for anything as extreme as T-Row is. I think what you're going to see in that kind of environment is reasonably healthy growth, but you're still going to have an inflation problem. It's still going to be sticky, and we have to kind of bear that in mind as we're thinking about what policy.
Drew, maybe off your remit, but let's go there. Frame out the 10-year real yield. Folks, the pros look at the inflation-adjusted yield much more than the nominal 10-year, or like Sweeney's glued to the 30-year bank rate mortgage, because, that's what you do. That's the way you roll in New Jersey. I'm sorry, Drew, it's ebbing up. I got a 2.10% on the 10-year inflation-adjusted yield, the TIPS yield. Just simply, where's the point that's critical for Drew Mattis? Is it here? Is it 220, or is it a much higher number?
I think it's a higher number from here. I mean, one of the things that I've noticed, one of the curiosities, I guess I should say, is, everyone was concerned that, some of the policies that are likely to be put in place are going to be inflationary. But then when you look at five-year break evens, for example, they really haven't moved all that much since the election. And so there is this kind of odd disconnect with regard to the inflation story. There's concerns about future inflation. There is an idea that inflation's still too high right now, which is also correct. But then you have this kind of, are things getting worse on the inflation front? And I think the answer is no. So it's this weird environment now in the inflation story where people are worried about the future, worried about the present. It's that middle part that we're not really sure what to do with.
Drew, what are you doing in the fixed income space here? Again, a lot of folks would be pretty happy at 4.3% in a 2-year, but are you suggesting folks take some credit risk here?
Well, there's a reason why, firms like ours like privates, private credit and the like. Okay. You get some extra yield and you give up a little liquidity, which, if you have a big enough balance sheet, you have liquidity in other places, so you can do that. But just, regular credit, high yield, there are opportunities there. And it seems like for the next 6 months or so, which is kind of our tactical outlook, things are okay in the economy, and you're probably not going to get any sort of major disruption. So, it's a little risky, but, as long as you are comfortable getting paid what you're getting paid for your risk, then, that's probably where I'd be.
Drew Mattis, thank you, and have a wonderful holiday season. Look forward to talking to you as we slide into 2025. Mr. Mattis holds court at MetLife as well. Red on the screen now, massive pullback, correction. We're down, NASDAQ's down 0.2%. I think that, we may get a VIX of 15.
Right, exactly.
That could ruin I have 3 Christmas parties today.
You do? Wow.
Yeah, 8 o'clock.
Yep.
Lisa and I were having gluten-free donuts.
Okay, good.
Good way to start.
Sounds exciting.
Yeah, 2 after that, We'll have to, lots of eggnog. We'll have to see how that goes. Right now, with our news in New York City, John Tucker.
All right, Tom, Paul, and Lisa, President-elect Trump has failed to convince a judge to set aside his conviction in the New York hush money case on presidential immunity grounds. New York State Justice Juan Merchan rejected Trump's argument that the trial was tainted by testimony and other evidence that should have been allowed under a July Supreme Court decision that granted presidents broad immunity. Bob Van Voris is a legal reporter for Bloomberg News.
Judge Merchan ruled that Trump had failed to preserve most of the objections to the evidence that he objected to, meaning that the judge is unable to rule on it because he didn't, object at the time. He ruled also that even if he had preserved those objections, they would not fall within the immunity.
Bloomberg's Bob Van Voris says it's unclear if the case will still proceed to sentencing. Trump spoke to reporters for over an hour at his Mar-a-Lago, Florida club, covering a wide range of topics. He said, among other things, Ukraine needs to reach a deal to end the Russian invasion.
Got to be a deal. No, got to be a deal. Too many people being killed. That is a war that's too many people. Got to make a deal. And Putin has to make a deal too.
Hours after Trump spoke, Ukraine claimed responsibility for the assassination of the head of Russia's radiological, chemical, and biological defense troops in a bomb explosion that took place in Moscow. Another deadly school shooting. A 15-year-old student killed a teacher and another teenager with a handgun Monday at a Christian school in Wisconsin. Madison Police Chief Sean Barnes.
She was a student at the school, and evidence suggests she died from a self-inflicted gunshot wound.
The female student also wounded 6 others at a study hall at the Abundant Life Christian School, including 2 students who were in critical condition. Well, since its debut on this day in 1989, 777 episodes of The Simpsons have aired. Longest-running animated American series. The show's creator, Matt Groening, convinced of the central dysfunctional family and the conceivement of the family, and named the characters after his own sisters, Lisa and Maggie.
It made the Fox network.
And his parents were also Margaret and Homer. So can you imagine?
That's so funny.
And out on YouTube, folks, they have the voices of these people. These incredibly, like one person will do 3 or 4 of the characters.
Yeah, it's amazing.
What is that franchise worth? I mean, if I look at like David Bowie's catalog or Bruce Springsteen's catalog.
Billions.
Like B.
Billions.
Billions.
Syndication revenue alone, they've made billions off of this.
In a family, it's a great divide. Like Mrs. Keene thinks it's absolute garbage, and I think it's basically modern Shakespeare.
Well, they're writing back when I believe it was Conan O'Brien who was one of the writers going way back when. It was really supreme. It was just very thoughtful.
Well, Barry Diller, who was the head of Fox at the time, he comes right out and says, if it weren't for the Homer and Bart, there would be no Fox network.
You mentioned Conan O'Brien. I'm going to just say it as simply as I can. Complete class act. Mr. O'Brien of Brookline, Massachusetts, has lost both his father and his mother in the last number of days.
Saw that.
And he's been a total class act about it. Our thoughts to the O'Brien family. From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures in the red. This is Investor's Eye November retail sales, industrial production data that's out this morning for a little bit more insight on the strength of the economy. Right now, NASDAQ futures down about 0.2%, 45 points. Dow futures down 0.3%, 151 points. S&P futures falling 0.3%, or 19 points. The 2-year yield 4.28%, up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. We have Brent crude down about 0.7%, $73 a barrel. We have spot gold lower at $2,641 an ounce. Few stocks on the move. We'll start with Tesla, up more than 2.5%, closed at a record high Monday, up 6.1%. And shares of AI server company Supermicro on the rebound. They're up more than 2%. That's following news it'll be removed from the NASDAQ 100. And finally, shares of Alibaba down 1% in Hong Kong after news that it'll record a $1.3 billion loss on the sale of its in-time department store business. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Reef Hussain, working with Sebastian Page over at T. Rowe Price, Baltimore. Their name's plastered across the Baltimore Orioles dugout.
Awesome. Great firm.
They need some pitching, to say the least.
Stansky,
T. Rowe Price getting everyone's attention on a sleepy December Tuesday. Retail sales at 8:30. The yield, 6%. I believe that's yield up, price down.
That is. I mean, we're sitting here at a 10-year Treasury here at 4.43%. So,
yeah,
man, that gets your attention.
That gets your attention. Like, are you ready for this, folks? And Lisa's too young to remember Matchbox 20.
Oh, that's
our songs today will be coming from the summer of 2000 when we were last at 6%. Mm-hmm. Meghan Robson has no idea who Rob Thomas is, her Matchbox 20, and joins us from BNP Paribas today.
Good morning.
Your note clearly doesn't say 6%. We're here at higher yields. What events would it take to get a breakout really back to 2000, 2004 yields? What would be that cataclysmic event?
Well, first of all, good morning. Thanks for having me. I think that the scenario, I haven't read the report, but
Neither
I think
have I.
The scenario,
it's Bloomberg surveillance. We don't read reports. Continue.
I think that, we're looking a lot at the risks of potential tariffs. And I think that seeing a reacceleration of inflation, if we see a spike in break-even yields as a result of new tariffs, but then additionally that causing the Fed to either pause or resume a hiking cycle would cause even rise in real yields. So I think that's really the bear case for next year. At BNP, we're not as severe as that, but I think we are out of consensus. We're calling for a pause in Fed rate hikes all throughout 2025.
Can I make some news? A pause on Wednesday? Please help me.
Not a pause on Wednesday.
Damn.
So we still think a 25 basis point cut. But they set the stage for an extended pause into 2025. I do think that this would be cause a credit spread widening, but one that we would buy. Whereas the other scenario you painted would likely be the start of a new bear market for credit if we did see rates that high.
U.S. corporate high yield up 8.85% year-to-date total return. U.S. leverage loan index, these are the Bloomberg indexes, which we paid good money for, 8.69%. Man, that's great returns in the high yield and leverage loan market. Does that continue in 25, do you think?
So we don't think that you're going to duplicate that positive of returns, but we do think it's a carry year for credit. So I think that you have a couple tailwinds at your back. The first is still this yield story. So yields are high. We're forecasting the 465 on the 10-year next year. That means that yield demand, pension funds, insurance companies, some foreign buyers are still going to come into the credit market. At the same time, you can see supply accelerate as a result of some of these pro-business policies we've seen from Trump, but not to a degree that you really see an imbalance. So carry story, I think, continues for next year.
You sound like you're from Brown and Columbia. Nobody understands it. What is a carry year?
Carry, so yield. I think, spreads we're forecasting just to go slightly wider, 10 basis points in investment grade to in a level of 85.
The yield.
take the yield.
Clip
so
the coupon,
clip
right?
the coupon. Places in credit like leverage loans where you have an elevated level of yields right now compared to high yield and IG, we think are a great spot to be. We also like long duration investment grade, so 10 years and beyond, where you'll have this elevated yield and issuers will still be hesitant to sell supply with longer dated maturities. We think those two spots are a great place to step into yield next year.
In your notes, I've read something that I don't think I've seen, and I can't remember how long. Globally, we like Europe to outperform the U.S. Why?
Yes. So it does seem an out of consensus view. I think that in Europe, we have slower growth, obviously, but that will allow the ECB to continue to be dovish. And a lot of the bad news is priced into European credit spreads. So we're trading a lot wider in Europe compared to the U.S. And then U.S., we're at all-time tights in spreads, and then you have this risk of reacceleration. The Fed potentially has to pause. We think that's not priced into the market yet.
Do your economists see inflation out there? I mean, you got a government in Germany, toast, a government in BNP Paribas, Paris, and France, sort of kind of like toast. I got the shock of Chrystia Freeland in Canada yesterday, going to a possible election early next year. I mean, with all that tumult, can we really give way to a new inflation regime?
I think it's certainly possible in the U.S. I think it will depend a lot on what we see happening with President-elect Trump's policies, and if we do get some of the tariffs that he's talked about, I think that could be certainly a catalyst for a reacceleration in inflation.
Sectors. Are there sectors that screen well for you guys from a credit perspective these days?
So we do like taking some pro-growth policy. We think that less regulation next year does warrant stepping into some of those areas, but where you can also avoid the tariff risk. So we like transportation and investment grade, and then in high yield, our favorite sector is still cruise lines, where
you're killing me.
You have low exposure to.
Cy, what's your favorite cruise line? I mean, Cy's on a Celebrity Cruises. Okay.
So you have low exposure to lower income consumer, where we have seen risk, and it's a leisure sector. So if we do see tariffs, we see that sector is less vulnerable to goods risks.
Dumb question of the day: are airlines investment grade? Delta, United. We've got JetBlue's executive coming up here today, I believe.
Yep. So we have airlines in both markets, but in investment grade also we have rail. So rail transportation, a major part of the sector, and then a handful of airlines as well.
How about my old stomping grounds, cable?
Cable. So
Charter, Comcast, they issued debt by the boatload. I made a small fortune with those guys.
So this is sector continue. I think we have to be a lot more selective.
Okay.
More selective in
what she just said is, Paul, you're wrong.
Despite the fact that IG spreads are very tight, that is a sector where we've seen more single name volatility, so that's a place we'd be cautious. Another place we'd be cautious is in building products. I think there you see sort of a trifecta of risks in 2025. Immigration, so building products, home building, it's a sector that really relies more so on undocumented labor. If President-elect Trump is going to go after that issue in a hard way, I think that home builders would be very vulnerable there. And then also this risk of rates high for longer could still sort of dampen some demand in housing.
My chart of the year is the price recovery of the blended Bloomberg Barclays Lehman Index. I don't think anybody saw this coming, where we've really migrated from a horrific 6 standard deviation move up into a better place. Can you actually say price appreciation within bonds for the next 12 months?
We're not expecting that. So when we talk about clipping coupons, exactly. I think the story is you just want to protect your capital, and a good place to do that, we think, is investment grade, the long end, leverage loans. But to find price appreciation, I think is much more challenging, just given the starting point for valuations. I brought this up.
I didn't even know how to do this on the Bloomberg. The Muni key.
Yeah,
absolutely. Fred Corcoran taught me the Muni key on the Bloomberg with Charlie Gogolak, and the answer here is I brought up the Delta Airlines LaGuardia Airport Terminals C&D redevelopment piece.
I'm buying it.
You get a 5% coupon. I don't have a price. I can't figure out how to read the screen, but you get to pick up your Uber closer to the gate than if you don't own the bond. That's worth doing it. Meghan Robson, thank you so much with BNP Paribas on transportation and investment grade quality. Retail sales in 1 hour. Drew Mattis says it's key.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Traders await the Federal Reserve's final interest rate decision for 2024 and also its monetary policy forecast. Fed Chair Jay Powell is widely expected to announce a further 25 basis point of easing tomorrow. But the path for the following months, well, that's a little bit less clear. Right now, we have NASDAQ futures down 0.1%, 38 points. Dow futures down 0.3%, 174 points. S&P futures down 0.3%, or 19 points. The two-year yield at 4.28%, up 2 basis points. The yield on the 10-year, 4.43%, and that's up 3 basis points. The Bloomberg Dollar Spot Index is little changed. Few companies making news. California utility company PG&E. The Wall Street Journal reporting the White House agreed to provide a record $15 billion low-interest loan to the company to help finance its efforts to upgrade the power grid and also reduce emissions. Shares are up about 0.5%. And some deal-making news. Spice maker McCormick said to be in talks to buy Sour Brands. It's a deal that could value the owner of Duke's Mayo at more than $1 billion. And finally, sources say Blackstone exploring the sale of the Grand Walia Resort in Maui. It actually bought the luxury hotel for roughly $1.1 billion deal back in 2018. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Do you have newspapers with you today?
We do.
Is that
yes,
on
we
our
do.
date calendar?
Boom.
Good. Lisa Mateo with newspapers. We'll do that in 15 minutes. Retail sales in 28 minutes. Drew Mattis says it's absolutely key. There may be a shock here of an American consumer. We're shocked to drag in here in the holiday season. Eric Winograd joins us right now with Alliance Bernstein. Eric, let's piggyback right on what Mr. Mattis said. The basic idea that the consumer is doing better than good. Do you agree?
Look, so far the anecdotal reports we've gotten from the holiday season are that the consumer is doing well, that we've seen a strong start to the shopping season. I would just caution, I'm not sure that'll show up in the retail sales report, though. Remember that the November retail sales report is a tough one because the timing of the Thanksgiving holiday really matters a lot, you know? So I wouldn't worry too much. I disagree with my old colleague, Drew. I don't think that today's report is particularly important at all. I think that the holiday season as a whole is important. I just don't think we're going to know about that at 8:30.
My word, we have to call up Maury Harris to get a deciding vote on this.
Exactly.
Get a tiebreaker.
Tiebreaker. Eric, talk to us about this K-shaped economy. How does that show up in the government numbers we get? Because I feel like the government numbers we report don't really reflect what's going on out there for a lot of Americans.
I think that's right. And unfortunately, you know, for better or for worse, the government numbers are aggregates. They don't do a great job of breaking down consumption by cohort. And so we have to rely on a lot of alternative data on the private sector and on other places to give us better information about how different sectors of the economy are doing from an income status point of view. And you know, we do get some of that data when you can look at credit card default rates and things like that. So, you know, it is obvious that some lower end consumers are struggling, but the official data just frankly don't do a great job of showing that.
So what do you think the Fed is going to do here? We're going to hear from them tomorrow. We'll have full reporting on that from Bloomberg, of course. What do you think the Fed's going to do tomorrow? And more importantly, what do you think they're going to do maybe in the first half of next year?
So the thing about the Fed is they decide what they're going to do tomorrow at tomorrow's meeting. They aren't going to decide tomorrow what they're going to do down the road, right? This is a data-driven institution, and so tomorrow I think they have enough evidence to support a rate cut, but also enough evidence to suggest, as Chair Powell has said, that they don't have to rush. So they're not going to decide about what to do next, and they're going to communicate that to us. They're going to say, hey, we really don't know what we're going to do next. We think we'll probably cut rates next year, and the dot plot will probably show some rate cuts, but they're not going to pre-commit to that. They're going to leave their options open because, look, by the time they meet in January, and especially by the time they meet in March, they'll have a lot more information. And, you make better decisions when you have more information to base those decisions on.
I haven't touched on this today, but I'll tell you, Damien Sassar was really interesting yesterday, folks, on the EM unwind. Eric Winograd, you tie in your research note, quote, the dollar is likely to do well. We're getting a lot of wellishness right now in the dollar. DXY 107. We had a run to yen 155, euro 104.92. It's there, but EM's unraveling. This is what you studied at Dartmouth. I mean, Asian studies, EM, and in the rest. Is this underplayed where there's legitimate EM weakness due to an American boom?
Look, I think it depends on magnitude, right? If you get 3 or 5 or 7% on the dollar, which is roughly what we're expecting, it's not great for EM, but it isn't cataclysmic either. If you start to see a really nonlinear move in the dollar, where you see a sharp acceleration in the dollar, that does hurt emerging markets because weaker currencies there pass through to inflation very quickly. Many emerging market central banks are already cutting rates to support growth because they need to. And if their currencies start to weaken, they won't be able to do that. So then you see capital flows coming out, both because dollar assets look better, which we expect they will, and because you're seeing inflation and a lack of ability from central banks to support growth. So we think, in our base case that this year doesn't look great for emerging markets. If we're wrong, though, and the dollar really gets legs, it could look a lot worse.
So, Eric, what's the AllianceBernstein 2025 GDP call?
For the U.S., we're looking for growth just below 2%, between 1.5% and 2%. I think that's a little bit softer than consensus, but not enough so that I would look at it and say, we're way out on a limb here. Our concern is that the market and economic actors right now seem to be hearing the parts of the Trump agenda that they want to hear and ignoring the parts that they don't. Right? The market seems very convinced that the Trump is going to cut taxes and deregulate, but then views the trade war and the possibility of tighter immigration policy as posturing. We don't have a strong conviction view on all of it put together. It just strikes us as a little bit odd that you take the parts you like seriously and the parts you don't as just negotiation.
I mean, I'm looking, Eric, at the uncertainties, the unknown unknowns of 2024, 2025. I got to get my years straight. And what I notice is a glow like 1998 into 1999, maybe January of 2000. But article after article tells me there's not an equivalency. Do you see equivalencies and analog to other time and places to this enthusiasm?
So, I don't know if I see an analog directly to the enthusiasm around a policy framework change. That strikes me as somewhat unusual. The year that we're looking at for a point of comparison in a lot of respects is 2018. And the reason is that one of the things we have confidence in is that there will be a trade war. Presidents tend to deliver the things that they campaign on early in their administration, and trade policy is something that the Trump administration can do quickly without congressional oversight. The last trade war was in 2018, and so in a lot of ways that year provides a sort of example for us to look at. And if you look at that year, it wasn't a great year for equities or for credit. The markets weren't terrible, but they weren't great either. Mm-hmm. You did see inflation go up over the course of the year. You did see the dollar appreciate by close to 10%. So that to us is sort of the starting point when we look at parallels.
Brilliant. Eric Winograd, thank you so much. With AllianceBernstein there, looking to 2018, we're looking an important 50 minutes away, 7:37 Wall Street time. At 8:30, the retail report, 6, 7, 8 lines, but beneath it, what, Paul, 20 pages, 16 pages of detail on retail. We'll dive into that. And some interesting disagreement there between Eric Winograd and Drew Mattis over the importance of that report. Drew mints in no words. This is a report the Fed has to pay attention to. Tomorrow, the Fed meeting, the Fed decides. We'll have our special broadcast there on all things Federal Reserve. Futures -20. With our news in New York City, John Tucker.
And let's start with a legal setback for Donald Trump, the president-elect failing to convince a judge to set aside his conviction in the New York hush money case on presidential immunity grounds. New York State Court Judge Justice Juan Merchan rejecting Trump's argument that the trial was tainted by testimony and other evidence that should not have been allowed under a Supreme Court decision that granted presidents broad immunity from criminal charges. And Bloomberg News legal reporter Bob Van Voris expects Trump to escalate the legal battle.
There's no question that Trump, if the decision ends up being adverse to him, he will bring it before the Supreme Court. There's a number of rulings that have to come down before we get there, but he would certainly challenge it.
A Manhattan jury in May found Trump guilty of falsifying business records to conceal a $130,000 payment to a former adult film actress, Stormy Daniels, before the 2016 election. And President-elect Trump's legal issues did not come up at his wide-ranging news conference at Mar-a-Lago, but he did cover an array of topics, including the war in Ukraine. Trump says President Volodymyr Zelensky has to be ready to make a deal.
Putin has to make a deal, and Putin would have never gone in if I was president.
The president-elect, speaking before Ukraine, claimed responsibility for a bombing in Moscow this morning that killed a top general. Yeah, the search for answers on Monday's deadly school shooting in Madison, Wisconsin continues. The 112th school shooting this year in the U.S. at a Christian school called Abundant Life has the unusual distinction of having a female shooter who was only 15. Police say she opened fire in a classroom during study hall, killing a fellow student and a teacher and wounding 6 others before responders would find her with an apparent self-inflicted gunshot wound. Madison Police Chief Sean Barnes said 4 of the wounded are still hospitalized.
6 other students and a teacher were injured and taken to area hospitals. 2 students remain in critical condition and have life-threatening injuries.
A motive for the shooting not immediately known. Black student enrollment at Harvard Law School dropped by more than half after last year's Supreme Court decision banning affirmative action in college admissions. This according to the New York Times. This fall, Harvard Law enrolled 19 first-year black students, or about 3.4% of the class. That's the lowest number since the 1960s. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, and Lisa.
I want to set up our 9 o'clock hour. John Tucker, thanks so much. There are 3 books that you read in the game on cash flow. One is Wicked, Wicked, Thick and Dry. I've read it. There's another one that's half as thick, not nearly as dry. Wonderful read. Don't have it in front of me. Sorry. And then there's Bill Priest. They don't even call it by its name, shareholder value or shareholder yield, whatever the book is. It's a classic book. It's short, direct, to the point. It is a rite of passage if you're in the business.
Okay.
And it's on free cash flow. And how Company A's free cash flow is different than Company B's free cash flow. Bill Priest to join us in the 9 o'clock hour. What'd you learn about free cash flow? And
well, free cash flow is what pays
money?
you back. I had a conversation way early in my career with a noted New York City real estate developer who didn't understand that our loans get repaid with free cash flow, not with the value of one's personal brand, that we have to get paid back in cash. So at the end of the day, free cash flow is what matters. And, you know, some industries have really good free cash flow characteristics. Others are really challenged because they're really, really capital intensive. And so you have to look other places.
The book for Bill Priest is Free Cash Flow and Shareholder Yield, New Priorities for the Global Investor. I can't believe it's coming up on its 20th anniversary. And it's you have to read it, even if you disagree with it. But the answer is he really walks through how do you avoid the train wreck in free cash flow? I mean, it's as simple as that. In the entertainment business right now, Mr. Sweeney, we're seeing that, aren't we?
Sure. I mean, I think at the end of the day, the investors are really looking for these streaming businesses to really turn to profitability. We know it can be done because you see Netflix and they just have a great income statement, a great cash flow statement. The business can be wildly profitable, wildly free cash flow positive, but boy, it takes a lot of investment to get there in programming, in customer acquisition costs, and all those things. Disney's now made the pivot to free cash flow. Others, Like Warner Brothers, Discover, like Paramount, and some others like Peacock, owned by Comcast. They're all still on that path to trying to get the free cash flow.
But Disney is 22% debt.
Yep.
I mean, it's not Apple or Mag 7, 2% debt.
Right. No, their balance sheets in good shape there. So, the media investors, they look at it as net debt to EBITDA. That's a key thing. The good news is they have huge cash flows at these companies. So lenders are very comfortable with the media space these days.
Well, we'll have to see. Bill Priest to be with us in the 9 o'clock hour after those retail sales report. We do that in 45 minutes as well. Little tentatives to the market. The futures at -19. NASDAQ craters down 0.2%. The VIX 14.98. We're watching dollar. We got DXY stronger in Bitcoin. Yeah, I'll quote it. 107,000 for Bitcoin.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures in the red. Traders turning to tomorrow's Fed announcement, but Chair Jay Powell expected to deliver a quarter point of easing. Now, we also have more economic data out this morning. In under an hour from now, it's retail sales expected to rise 0.6% in November compared to 0.4% the prior month. NASDAQ futures down 0.2%, 45 points. Dow futures down 0.3%, 167 points. S&P futures falling 0.3% or 20 points. The two-year yield, 4.28%. That's up 2 basis points. The yield on the 10-year, 4.43%, and that's up 3 basis points. The Bloomberg Dollar Spot Index is little changed. We do have some deal-making news this morning. Danish brewer Carlsberg. It said it received UK and European Union regulatory approval for its $4.2 billion takeover of UK soft drinks company Britvic. And I thought this was interesting. The gig economy creeping into brick and mortar economy. Now, the Financial Times says apps like Young Ones, Temper in the UK and France, they're gaining popularity. Clients post shifts at a certain rate of pay, and workers on the app can apply to do them. That is your Bloomberg Business Flash. Tom and Paul.
Is that what's going to happen with us?
That's what it's interesting to see this because it's starting to pick up there. So I'm wondering if it'll happen here.
Listen to her enthusiasm over
it's
Klarna, which is, I don't have the article in front of me, but Klarna, which is one of these buy now, pay later things.
Mm-hmm. Yep.
I said AI is all of a sudden replacing lots of jobs. I'm not there yet.
Yeah.
Eric Schmidt's talking about he's making some intelligent. Yep. Paul, I got a 30-year mortgage, 7.12%.
Mm-hmm.
I mean, Lisa says the Fed's going to cut rates. Okay. mean, the housing market sort of like is dead the right word? Or
yeah, you talk to a real estate agent, there's just very little activity because, why do you want to leave your home with your 3% mortgage and buy something new at a 6 or 7% mortgage?
But a 7.12, and let's say inflation, let's be grim, is 4%. That's a real cost of 3%.
Yeah.
7 take away 4 is 3.
And how about
maybe higher?
Exactly right, Tom. And I think the issue I hear from real estate professionals is the home affordability. A, the prices for homes are really, really high, and B, the cost of financing is pretty high relative to the last 15 years. So for the average young home buyer, it's a tough deal.
It's brutal. I mean, and frankly, the rentals are just as bad as well. Futures are negative 20. Again, retail sales in 40 minutes. First thing I'll look at is that control group.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Good morning, everyone. It is that time, the daily look at the front pages. The Lisa Mateo Minute will do it. It's brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/ I love this, around the clock. One more time, ibkr.com/ around the clock.
All right.
Lisa's on the clock. What do you have?
I have those outlet malls. They're drawing a lot more luxury brands. I thought this was interesting, and I've seen this.
Yes. You did it on Black Friday.
I did.
Yes.
It's the outlet malls because shoppers looking for bargains, right? But they still like the luxury goods. So more are headed to the outlet malls to get those designer shoes, clothing, handbags at more affordable prices. The Wall Street Journal says even though foot traffic's still below pre-pandemic levels, retailers are leasing more space at outlet shopping centers, so they're starting to grow. There's more than 200 of them in the U.S. I didn't even realize that. A lot of them all for this affordable luxury. We're talking about Coach, Marc Jacobs, Gucci, Prada. And what I noticed from going to these, like Woodbury Commons or Jersey Shore outlets, is that the longest lines are at these stores.
Really?
I mean, just wrapping around outside. So more people are doing it. They're saying the reason why is because a lot of these luxury retailers are selling their excess products to places like TJ Maxx.
Yep.
And people are realizing, hey, you know what? I can afford this high-end stuff.
The Economist with an article, I actually read every word of it, and I think they had Versace. I do not have the number in front of me, but I was stunned what percentage of Versace is on sale right now. Because it used to be they were never on sale. Ever, you know.
Right. Sometimes it was said that they would like shred them or do something else, so they would rather do that than put it on sale.
No
so that was something else in this article.
Are the outlet malls still a thing? Like when you go, are they packed?
The mall's not, you know what? I've been to the mall even during the holiday and it's not that packed, but it's the outlet malls that people are like flocking to. It's crazy. And it's interesting. Next time we have a luxury person, I've got to ask him about this, about the outlet malls and luxury sales.
We have Michael Barr with us almost every day. He's a luxury person.
Luxury guy.
Here it is. Why Louis Vuitton is struggling, but Hermes is not. And somewhere in here, this is the Economist magazine, there's, how much of Versace's on sale? I was blown away. It's like a big deal. Right. Next, what do you got?
There you go. Since we're sticking with shoppers who love deals, no, we're not doing the drones. I still have not seen one in New Jersey. But sticking with the shoppers who love deals. So Business Insider says, who is the top downloaded app of 2024? And they say it's actually Chinese-owned e-commerce discount retailer Temu. It's the most downloaded for the first 10 months of 24, beating out TikTok, ChatGPT, all that. It sells everything, tech gadgets, apparel at a cheap cost. Owned by PDD Holdings, particular among the Gen Z consumers, 18 to 24. They love it. They've been downloading it. The big problem, though, is that President-elect Donald Trump, threatening with the high tariffs on Chinese goods. So people are wondering, are they going to start raising their prices to kind of offset that levy? But this is like the big thing.
Is it a TikTok thing where it's Chinese-owned and we're worried that Temu is going to know what our checkbook is?
Not so much. They haven't actually brought that up. That's true.
Okay. So Temu has invested millions to market to American shoppers. Temu ads aired during the Super Bowl.
Oh, you remember those?
Wow.
Yes,
Okay.
they did. 3.
Right.
They're like 7 billion a pop, aren't they?
Yep, exactly.
It's crazy.
Close to 7 billion.
Oh.
Okay, next.
Okay, the world's busiest airline routes in 2024. This is a travel comeback for Asia. This is actually a report on Bloomberg. Aviation data provider OAG, 7 of the world's 10 busiest international routes are largely in Asia. This was taken from January to December of 2024, only included the round trip flights. The busiest international flight route was Hong Kong to Taipei, 6.8 million available seats. Then you had Cairo to Jeddah, Saudi Arabia. We talked about Saudi Arabia yesterday. That's the second place. And then third place, Seoul to Tokyo Narita. That was third place. But it's a mix. It's a mix of leisure, a mix of business destinations. So they're starting to see that. And if you want to look transatlantic, the only place in that top 10 was actually New York JFK to London Heathrow. But it just goes to show.
Well, see, what I don't think we're seeing yet is just broader China to the U.S. Like I still think those, you hear from the luxury folks, you're still not seeing the Chinese consumers coming here into the U.S. and shopping. And I think part of that is because there's just not a lot of flights. It's kind of a post-pandemic thing. I don't know.
I thought it was fascinating yesterday with Stephen Trent of Citigroup. He was leading with Delta, but he's got Panama.
Yeah,
This is
Latin
the
America,
Latin
sure.
American
Yep.
flight. Okay.
Yep.
You got one more for us?
I do. Okay, so starting January
Whoa,
2nd.
whoa.
Yes.
Is it the red one with the rock?
No, it is not. I have to. I actually fell asleep during the movie. It's really bad.
There's your 1-star rating from Lisa Mateo.
And I love The Rock. But this is about your other favorite topic: people coming back to the office, right? So starting January 2nd, a lot of companies are doing that 5 days a week. Everybody has to come in, including Amazon. But Amazon is running into a problem. They actually don't have enough space in the office for all these people to come back. So they're running into this problem. It was seen in this internal memo. You have workers Atlanta, Houston, Nashville, and New York. They're saying they can continue following the 3-day rule until they can find enough space for them. And these delays could go out to May. That's what they're saying. So this is the problem they're having. It's actually not the first time when they actually announced the 3-day week coming back.
So
they had
just
the same
be clear.
problem.
Just to be clear, we're not hybrid, are we? We're back every day, aren't we?
I don't know if it's 4
back
or 5. That's a good question.
Well, you and I and Tom.
We're here. We're all here.
I mean, Truman hasn't missed a day since the pandemic. I mean, the kid came in every day.
Tucker took a day off. I think it was after Lehman.
Okay.
It was just 2010-ish as well. Lisa Mateo, thank you so much. The newspapers. How about that? T. Rowe Price, 6% yield. When was the last time we saw 6% yields? Paul Sweeney remembers the summer of 2000. Matchbox 20. Good morning.
Just hold me in there, or just hold me again. Can you help me? I'm bent. I'm so scared that I'll never get put back together. Keep breaking me in, and this is how we live with you and me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr on assignment, recovering after the Lions loss. Lisa Mateo with us as well. We welcome all of you across the nation. Your commute across this nation on Apple CarPlay, Android Auto. I get emails from Android Auto. It's bigger than Apple CarPlay. I have no idea.
Yep.
Apple CarPlay, Android Auto. Good morning on Sirius XM channel 121. And along the corridor here from Mount Katahdin to Block Island 92.9 in Boston. Good morning, Boston. We'll try to be Patriots-free this hour so that we don't depress ourselves. Belichick still. UNH?
UNC.
UNC.
Yep,
Signed.
Exactly. That's the way.
Done deal.
I think it's, yeah, absolutely.
He's got the merch.
Sure.
Okay.
He's got the hoodie, the UNC hoodie. He'll be all set.
He'll be courtside for the basketball.
Yes.
He's got to make an appearance. Good morning, Bloomberg 1130 AM in New York, and of course 99.1 FM in Washington. Washington is a general statement, particularly after the president's comments yesterday. Mar-a-Lago, president-elect, I should say, really heating up. And so a lot of political coverage into the end of December and into January as well. Our new distribution is YouTube. I'm learning more and more about it each and every day. Paul, what's your summation of our YouTube experiment?
YouTube, well, first of all, YouTube is just massive, Tom. It is a huge part of the company that...
internationally.
Yeah, the whole Google thing. It's a global, obviously, and it's, people are paying big money for this on a monthly basis to get YouTube
That's a
TV.
YouTube TV.
Yeah, unbelievable. So,
Yeah,
I mean, the whole
I'm
YouTube
like-
complex is just extraordinary, and that's where a lot of folks tell you, they get their news, they get their information, they get their entertainment, they get their some of their sports now. So
Lisa lives on it.
I know.
She watched all three trailers of The Rock, the red one, and she said she fell asleep. Very importantly, we've got the JetBlue CEO with us. Is it in this hour, Paul? I think
8:15 Wall Street time.
Soon.
Yep.
Okay,
right
so
up.
we'll get to that right now. I just think with the markets the way they are, a little bit of a pullback here and dollar stronger as well. Bloomberg Surveillance, we're brought to you by Cohn Resnick. Advisory Assurance Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies and platforms to drive competitive advantage. Thank you, Cohn Resnick. From the Interactive Broker Studios at Bloomberg Business Flash, she's awake, Lisa Mateo.
I am, and we've got futures. They're sleeping. They're falling, following another record close for the NASDAQ 100. That is thanks to big gains in the tech sector. Also, hopes for another interest rate cut from the Federal Reserve tomorrow. Later in the week, the focus shifts to the Bank of England and also the Bank of Japan. So we have NASDAQ futures down 0.3%, 71 points. Dow futures down 0.5%, 221 points. S&P futures down 0.4%, 26 points. The two-year yield 4.28%, down up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. To currencies, the Bloomberg Dollar Spot Index is little changed. The yen snapped a 6-day losing streak. Right now, it's up about 0.1% at 153.88 against a dollar. The euro weaker, British pound stronger, Bitcoin above 106,000. Cryptomania continues. Crypto-linked stocks. We'll check in with Coinbase and MicroStrategy up nearly 1%. Mara Holdings up more than 1%. And shares of Pfizer up about 3%, just about. It forecasted 2025 revenue in line with estimates. And then shares of Tesla up more than 2% after closing at a record high yesterday. That was up about 6.1%. Now, as far as earnings this week, memory chip maker Micron Technology tomorrow, followed by FedEx and Nike on Thursday. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. With Goldman Sachs, Ben Snyder joins us right now, U.S. portfolio strategy on the broader macro team. Ben, clear the air here. David Kostin, and you have the immense privilege of working with Mr. Kostin, did a report, I'll say 12 weeks ago off the top of my head, which basically said the mean reversion on equities is single digit. I don't want to do that now. I don't want to redux that right now. But how do you do a short-term view given that long-term single digit research that your shop has done?
It's a key question and something we're struggling with ourselves. The simple answer is valuations. Valuations have historically been very good signals for long-term returns, as you were just discussing, but really tell us almost nothing about the short-term outlook.
Thank you. I totally agree with that. Liz Ann Saunders and Kev Gordon. Gordon worked last week, did he?
Yeah.
Okay, Kevin Gordon over at Schwab. They agree with you, Ben Snyder, that on a short-term, say, one-year view, the correlation of ratios like PE or quote-unquote value is pretty weak. If it's weak, what's strong?
What's strong is earnings growth. Earnings growth is really the driver of stocks. It's true over long term, but especially over short term. That's really what matters. And the outlook for earnings looks really good.
So, Ben, I'm looking at your 2025 equity outlook that you and the team put together. Think big. What do you mean by think big in 2025?
What we mean is the large cap stocks that have done so well over the last several years, and especially the last 2 years, we think will continue to do well in 25. It's funny to call the largest, most profitable stocks in the market a contrarian recommendation, but it's amazing how much of my conversations recently have been focused on investor skepticism about these stocks. And you see the same thing when you look at positioning data. Hedge funds positions in our prime brokerage data have actually been moving away from the mega cap stocks. But as I said earlier, the key question is earnings, and the earnings outlooks for these stocks remain really strong in 2025.
AI, it's been a huge theme for equity investors over the past 2 years. You kind of think about AI in the concept of deliver the goods. What do you mean by that?
Well, ultimately, the question is not, do investors believe in AI? You can see it's very clear. We talk about it all the time. The question is, will this ultimately manifest itself in elevated productivity for the U.S. economy and reach not just the small handful of stocks that have benefited from AI CapEx so far, but a broader swath of the market? We think that's coming, and we think we're going to take another incremental step in that direction in 2025.
Ben, I want to go to your deck. Ben, we've got a rule in December. There's no deck over 10 pages. You got a 40-page special here led by Costin. Does Costin make you work 7 days a week? Is he that tough on you?
You have to know, Tom, we're moving in the right direction. Last time we spoke, the deck was 90 pages. This is 40 pages. We're making huge strides towards more digestibility here.
More digestibility. It's a very digestibility here. You and David Costin are talking about animal spirits. I'm calling that by nominal GDP. So Lincoln Jan Hatzius and David Costin. Did you notice that Hatzius and Costin will talk to Tracy Alloway and Joe Weisenthal? But not us.
I know. Well,
we get Ben Snyder, we win. Ben Snyder, tell me about the linkage of nominal GDP into your animal spirits call.
Sure. Well, nominal GDP for equity investors is basically revenue growth. And nominal GDP has been very healthy lately. But if you look at what's happened in sentiment measures since the election, the market is telling you, and not just the market, corporates are telling you they're feeling incrementally more positive about 2025. You can see it in small business sentiment, you can see it in M&A announcements, and all of that tells us on the margin, we're likely to see stronger economic activity, and that means stronger earnings growth coming next year.
Stronger earnings growth coming next year. I have to have earnings growth, don't we, for a move higher in the market? Because I feel like I'm already paying a really rich multiple. How do you guys think about the S&P a year from now?
Yeah, our base case forecast is that the multiple is around where it is now. We have a pretty good macro model for it. It's based on things like interest rates, the unemployment rate, corporate profitability. And even though multiples are high today relative to history, they're almost dead in line with that model. So the view is the model's high, valuations are high, but as we said earlier, it's the earnings growth that's going to drive prices higher.
What do you see in free cash flow growth? We have the honor of Bill Priest coming up here in the 9 o'clock hour. Ben Snyder, his book is iconic on free cash flow growth. I mean, does it correlate into nominal GDP? Does it correlate into corporations adapting and adjusting to the cards they're dealt?
It doesn't always, but right now it does. One of the questions investors ask is how can you get comfortable with the multiple where it is? And as I was saying earlier, one of the drivers of the multiple is the profitability. It's margins, it's free cash flows. And right now, free cash flows on a margin basis are about as high as they've ever been for large cap U.S. stocks.
Small caps. People have been promising me small, mid-cap performance forever. And I feel like the window's like 15 minutes. What do you guys think about small and mid-cap stocks?
So, yeah, as I said earlier, we still like the large cap stocks. We feel good about the S&P 500. But the biggest pushbacks we get from investors are the multiple, as we were just discussing, and, of course, index concentration. I heard you talking a little bit earlier on the program about discount shopping opportunities. If you want a discount opportunity in the U.S. equity market, look at mid-caps. These are stocks that are profitable. They've outgrown and outperformed the S&P 500 over the last 30 years. And right now, they're trading almost exactly in line with their long-term average multiple.
Ben Snyder, thank you so much at Goldman Sachs. Don't be a stranger. I want to get you back here. Again, love to get you in here. Ben Snyder, you and David Costa
what's
together
weird?
would be
Ben
cool.
went to Brandeis. I never knew anybody growing up that went to Brandeis, but since working on Wall Street, I've met maybe 8 to 10 folks at Brandeis.
Oh, yeah, it's a great program.
One smarter than the next.
Yeah.
I don't know what they're doing
It's
up
great.
there in Brandeis. It's just, I didn't know about it.
I did a lecture up there once.
Wow.
Alex Sherman over at the Death Star.
Okay.
His mother was iconic at Brandeis.
Okay.
And he had Steve Cicchetti came in,
Yep.
who ended up at BIS in Geneva and definitive on money and banking, if you will. And also Catherine Mann of the
Yes.
Bank of England was there
Yep.
as well. Great faculty,
Yep.
really top flight
impressed.
academics. And within the signal of 92.9 FM, the entire
Yes, exactly,
campus is,
exactly.
You know, they're just glued to Bloomberg surveillance at 92.9 FM in Boston. Ben Snyder of Brandeis University. Let's do this. We're coming up on an important interview with JetBlue's CEO, Joanna Garrity. Right now, let's go to the news in New York City. Here's John Tucker.
All right, Tom Pawai and Lisa, White House officials still trying to ease concerns about the thousands of drone sightings that have been reported in New Jersey and other parts of the Northeast. The National Security spokesman, John Kirby, says no reason for alarm.
Our assessment at this stage is that the activity represents commercial, hobbyist, law enforcement drones, all operating legally and lawfully, and or civilian aviation aircraft.
A White House spokesman, the spokesman John Kirby, says the FBI followed up on 100 tips out of the more than 5,000 it's received in recent weeks. President-elect Trump says he thinks the White House knows more than it's saying.
They know where it came from and where it went. And for some reason, they don't want to comment. And I think they'd be better off saying what it is. Our military knows and our president knows. And for some reason, they want to keep people in suspense.
The president-elect says he doesn't think it's the enemy, but he suggested his New Jersey golf course could be a target, saying they're flying very close to Bedminster. At a wide-ranging news conference in Mar-a-Lago, President-elect Trump also discussed his pick to lead the Department of Health and Human Services, Robert F. Kennedy Jr.
I think he's going to be much less radical than you would think. I think he's got a very open mind, or I wouldn't have put him there. He's going to be very much less radical. But there are problems. I mean, we don't do as well as a lot of other nations.
The president-elect speaking as RFK Jr. kicked off meetings with Senate Republicans ahead of his confirmation hearings. And finally, Israeli officials say a ceasefire in Gaza is a more realistic prospect than at any time of the past year, suggesting a long-awaited deal to free hostages and boost aid to the beleaguered territory could be close. The optimism has been reflected in recent comments by Prime Minister Netanyahu's senior cabinet members. There's been no official comment from the Hamas side. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
John Tucker, thanks so much. She is out of Syracuse University in law, went through the HR, the people. It's not HR at JetBlue, it's called people.
People, okay.
People. She was in the people section. And now running the shop at JetBlue, beleaguered JetBlue, Joanna Garrity is going to be in conversation here with John Farrow in a moment. Paul, you look at the financials, if you didn't know it was JetBlue, which we've got a bias to JFK and all that, wow, do they need to turn things around? There's no other way to put it.
You look at this thing, again, the FA function, Tom, on the Bloomberg terminal, one of the most widely used functions for financial analysis. 2019, right before the pandemic, $8 billion in revenue, $1.5 billion in EBITDA. 2020, revenue down to $3 billion, and they lost $1.3 billion, and they've been trying to, build their way back up. Calendar year 2024, the consensus is $9.2 billion in revenue and about $500 million in revenue and EBITDA. So just a fraction of the EBITDA they had pre-pandemic.
80% debt, which, with an airline, I mean, I'm going to look at UAL right now as a compare and contrast on that. I'm trying, if I could type, it would help. Small detail. I see. I'm brand new to the Bloomberg. I just Paul, I just can't get it done. UAL 62% debt versus 80% debt at JetBlue. And, I don't know. The Journal had the article the other day where I guess they're going to go back to trying to get Lisa Mateo on her, sojourns down to Aruba, Turks and Caicos, 4 cities in Florida. They're back to basics, right?
They are. I mean, I think, but, when you talk to JetBlue customers, they're generally very happy with the airline. They like the service. They like that. It's just some of these, non-major airlines. I'm not sure what the term is in the industry, but the non-Uniteds, Americans, Deltas of the world. It's the more limited service airlines like a JetBlue have been struggling here because the consumer has come back. The business. Domestic business is not back to where it was.
I mean, I'm looking at the sell side on this, folks. I got Goldman Sachs, Catherine O'Brien to sell. Wolf Research, Scott Group's been around, underperformed. Barclays, underweight. I'm picking them out.
There's some
this is hard. Holds and buys in there, but BNP Paribas, James Hollins is in the game, underperform. I mean, he's got a target of $3 a share. That's brutal.
Yeah, 2 buys, but 11 holds and 5 sells, Tom. So the street is really not buying into what this management team's trying to sell at the moment. So it feels like when you look at the analyst recommendations, Tom, maybe it's a show me story. And show me you can turn this thing around.
Well, it's a show me thing, but let's go to our surveillance leisure correspondent. Paul Sweeney joins us with Lisa Mateo as well, because John Tucker and I don't have a life. I mean, the stereotype of JetBlue is JFK South, right?
Well, I'm a huge JetBlue flyer. I'm a big fan of them. I'm one of their big members, which is not saying much, but it's just starting to show that they're doing a lot of upgrades, like first class and things like that. They're starting to appeal to a wider audience, and maybe that's
after this busted merger.
Yeah, I'm surprised the regulators, haven't allowed more mergers in some of these regional airlines or non-major airlines because, boy, the Spirits of the world, the South, they're all kind of struggling here.
I mean, we'll have to see.
Yeah. So
Joanna Garrity, and it's going to be a really interesting, timely conversation. We say good morning, particularly in the tri-state area, Bloomberg 1130, and down in Florida, in booming Miami. Here now, John Farrow with Garrity of JetBlue.
Also cutting capacity to increase fares and focus on East Coast leisure destinations. Joining us now to discuss is the JetBlue CEO, Joanna Garrity. Joanna, good to see you.
Thanks for having me.
The demand for premium is through the roof and a lot of people are trying to provide the capacity for it. What gives you the impression, the confidence that demand's going to stick around?
I mean, JetBlue's been doing premium for 10 years. We introduced our Mint product 10 years ago. This is just continuing to round out the suite of products that we have. We have a great coach experience. We have even more space, Mint Lie Flat, and now more of a domestic Mint, domestic business class seat that we're going to be introducing in 2026. Very excited to bring it to customers in leisure markets.
Food is best in class. I'll say that on your behalf.
Thank you.
I've done the flight in Mint to California and to London as well. Where does that come from? How expensive is it to provide that kind of product?
Yeah, I mean, we really look to provide a differentiated experience, and we lean in on certain areas. So food has been an area that we focus on. Comfort is another area that we spend a lot of time with. We have a great partnership with Tuft & Needle, and as we think about our new domestic first class, comfort's going to be the area that we lean in on there as well, with some interesting features of our seat product that provide a bit more comfort to customers.
How difficult is it to thread a needle with the likes of business class, given the fact that JetBlue traditionally has been an airline that caters to pleasure travel, to the idea of traveling with the family to warm places in the wintertime? How much does that kind of create a conflict for you?
We don't think it creates a conflict because everybody's a leisure customer. And when you think about what you like to do on a vacation, sometimes you want an elevated travel experience as well. So we want to make sure that we have an offering for every type of leisure customer. One of the things we have done recently is kind of retrenched in the Northeast, really focusing on serving the best leisure markets out of the Northeast, Europe, the West Coast, down in the Caribbean. And there's a real market for that premium seat.
I guess another way to say this is businesses are willing to pay more on their expense accounts than individuals, especially when they're going on vacation. How difficult is it to charge the rates that make it worthwhile, given the fact that it's people going on vacation and they typically have budgets?
We're not focused on charging rates that are akin to what a business customer in a business would charge. We really want to make the premium experience affordable to leisure customers. When we introduced Mint 10 years ago, we did just that. We reduced fares to the West Coast. We introduced a better product, a better service, and that's what we're looking to do here. It's really important for JetBlue to make sure that we have affordable fares and that all of our products are accessible to the leisure customer. So that's the customer that we're targeting, somebody willing to pay a bit more, but not at the size that you would for a business.
You've been tasked with turning around the balance sheet of JetBlue. And you've made progress in that front. You just reported earnings that were positive and really pointed toward progress in that. How much are you able to raise prices at a time where you see increasing consumer pushback, but at the same time, there seems to still be that ongoing demand for travel?
There's very healthy demand in the peak, and that's where leisure travel is great. So as we think about, the holidays, we think about the summer time frame, that's where I think JetBlue does its best, because we fly to some of these great destinations. Troughs are definitely more challenging. We've seen some pricing pressure in the troughs, and we've reduced a lot of flying in the troughs. So it's really about balancing out that year and making sure that, when demand is high, you're focused on trying to capture your share of that demand. And in the troughs, really reducing the losses.
So do you expect to increase fares this year?
We're hopeful that we can keep fares affordable that reflect the cost of service. It's more expensive to travel now because there are costs. Airport costs have gone up, labor costs have gone up. So there's meaningful inflationary pressure for the airlines as well. Our great food comes at a cost. When you start seeing the grocery costs go up, that means the food in an aircraft is going to go up too. So we're really trying to balance it and make sure that relative to the other travel out there, that JetBlue is an affordable fare for customers and accessible for a leisure customer.
Well, there's also been other constraints on the airline industry when it comes to getting the parts they need, comes to actually getting the planes they need to fly. And then next year, a lot of people are talking about, well, we might get tariffs, and potentially that might impact the supply chain. How are you preparing for all of that?
Yeah, I mean, JetBlue has a unique situation with Pratt & Whitney right now, and we have a number of aircraft sitting on the ground that we're paying for, but we're not able to fly because they're due for an engine inspection, and there's not enough capacity to do those inspections. So that's definitely a headwind for JetBlue. As you think about tariffs, it's a bit too soon to tell. I think the good news for JetBlue is we take a lot of our aircraft from Alabama, but, depending on how tariffs get put in, we do have exposure in Europe and in Canada because some of our aircraft come from there.
Of course, the JetBlue Spirit Airlines potential merger was blocked. Are you potentially thinking about going at it again in the next 4 years in the space, more mergers and acquisitions, because there might be a lighter regulatory touch in Washington, D.C.?
We're really focused on delivering our new plan, Jet Forward. We want to see JetBlue thrive as a successful standalone company. We have a brand that customers love. We've got a great product, a great service. We're focused on flying in the places that people know us. So we're really focused on our standalone plan, Jet Forward, right now.
Okay, so you might not dip your toes back into that space, but do you think that this is going to be a more welcoming administration when it comes to things like mergers and acquisitions?
It's hard to speculate because we don't know exactly what the plan is going to be, but it's hard to see an administration that's going to be worse than the administration we had around antitrust.
In the meantime, you have announced a number of changes in terms of the Jet Forward, including closing down certain operations in a number of cities. I believe that they are going to cut, you're going to cut some 50 routes.
Correct.
Is it done? Are there more to come?
The network is always something that's evolving, so the majority of the changes are done, but we're not going to rest on our laurels. If a particular market is not producing results, then we're going to take a good hard look at it, see if we can improve it, and if not, then we're going to point those planes to a place where we can make money. We've got to become profitable, and part of that has made the need to make some tough decisions.
I've got to follow up. Have you spoken to the incoming administration?
We have not spoken to the incoming administration.
Are you planning to go down to Mar-a-Lago anytime soon and make the pilgrimage?
Right now, I'm focused on holiday travel. We have 150,000 customers a day flying on JetBlue.
Palm Beach is a great place
over the holidays.
For the sun for the holidays.
You can combine the two. What do we call that?
Yeah.
Workations?
Leisure.
Pleasure?
Leisure.
Bleisure.
Yeah,
bleisure. Okay, bleisure. You sing a lot of bleisure?
We see a lot of bleisure. We see a lot of leisure over the holidays, too, though. And we're just really happy to be a part of connecting people with their families over the holidays.
What does the volume look like at
About
the moment?
150,000 people a day
Wow.
over the Christmas holiday. We've got about 1,000 flights a day. And, it's amazing when you think what airlines do and the magic that we can deliver to customers reuniting their families and making that great experience. It'll be busy. It'll be tough. And my hope is that everybody can be patient and a little kinder.
If you're asking for patience, does that mean there are going to be delays? How does this stack up?
Oh, you've teed that one up perfectly. Delays. I wish this administration would focus more on air traffic control. That has definitely been a meaningful pressure to JetBlue, to all airlines. When we think about this next administration, that is a real focus area for JetBlue.
What would you like to see change? What can they do?
I would love to see more hiring. I'd love to see better technology and ultimately improving the amount of delays that come out of the air traffic control system in New York in particular, which is the hardest hit.
We'd all like to see the same thing. No one wants delays, do they, Bremo?
You're talking to the choir. I've had, okay, honestly, going to Florida is the hardest, though. I have to be honest, because there's always weather. There are winds that come up. There's a random storm that comes up. And some people get delayed for a long period of time, and they sit there, and then their plane gets canceled, and they can't go on vacation with the whole family.
Or CEOs can't control the weather, though. Okay. But what is interesting is we have here an airline CEO saying they want the FAA to hire more, and the incoming administration is talking about Dogifying the government.
It's true.
Well, hopefully they're not talking about air traffic controllers. We are grossly understaffed. And at the end of the day, those delays, even with weather, we should be able to have a more resilient aviation air traffic control system with weather. That is just something that we have to deal with.
Just pause for a second. Are you saying that all those delays, it's not because of weather? It's just
no,
because
some of the delays are definitely because of weather, but they are exacerbated because we are significantly understaffed among air traffic controllers.
I never trust the excuse. You've got a problem with trust as well. I never trust them. I never trust them.
I know what's actually going on. And actually, to Joanna's point, there is a problem with air traffic control.
The staff's missing or something.
But sometimes you can actually see how bad the weather is, and you're thinking, I would wait
then it's
for that.
the weather. But sometimes you look outside, the sky is blue, the sun is shining, and they're like...
Air traffic control delays.
Yeah.
That's a problem.
Come on. The pilot's missing, went out the night before, who knows?
That's in Japan.
That does not happen.
That was wild.
Doesn't happen
at JetBlue. That does not happen at JetBlue.
Just to be very clear. Okay. Joanna Geraghty, it's good to see you.
Thank you.
Appreciate your time. Thank you. Up next on the programme, we'll break...
John Farrow, thank you so much. With Joanna Geraghty of JetBlue. Paul, retail sales here.
Yes.
Drew Mattis says Jerome Powell should lean in on the Bloomberg terminal and look at it.
Exactly right, Tom. Let's go through some of the highlights here. Retail sales month on month for the month of November, looking for a consensus as a positive 0.6%. That'd be a little bit better than last month at 0.4%. You strip out the auto and gas, a little bit volatile there. Still looking for retail sales to be up 0.4%, Tom. And that would be a marked improvement from last month, 0.1%. So, again, it kind of gets to the consumer. I think if we think back to some of the retailers that we heard from the results over the last 3 or 4 weeks, you know, the folks like Wal-Mart, Target, doing okay to maybe a little bit better than okay. But we saw, I remember Walmart saying a lot of their customers with incomes north of $100,000. That was a source of growth for Walmart.
There's a change in the mix, and of course you're going to see that within the voluminous retail sales data. I mean, just to review this, and again, as Eric Winograd said of Alliance Bernstein, there's huge calendar issues off of a late Thanksgiving, but the control group, which takes out this, it takes out Eagles Sphere tickets and everything else. It takes out watching Red One the third time. You know, what did you go see? What was Anthony something Young in, or what was the movie you saw this weekend?
Craven.
Craven, yeah. Retail sales control group does not include Craven, the Hunter, whatever it was. A negative 0.1%. What will be that revision? Right. Up to 0.4, folks, that's not small. That's a lift that's expected within these retail sales. And Drew Mattis suggesting, I don't want to speak for Mr. Mattis, but I think he's going liftier, up to a bigger number. And, you know, let's go over the data right now. Futures deteriorate negative 20 down to negative 25. Dow futures negative 200. This is a 0.5% pullback. NASDAQ 0.5% pullback. Bitcoin, a life of its own. Why not? Let's get to 110,000 on Bitcoin. I mean, what are we waiting for?
Sure.
107. In the yield space, I got higher yields by 3 basis points across it. But Paul, I'm sorry, 2.09% on the 10-year real yield is beginning to show that elevated, not tension, but reality.
Yeah, sure. I think you're right, Tom. And I think if you look at the WIRP function, WIRP, World Interest Rate Probability, everybody's focusing on a 0.25% cut rate tomorrow. But then after that, the consensus kind of breaks down about kind of where the Fed goes from here. Maybe another 50 basis points next year. That's kind of what the market's this going to be. That's a big difference.
Guess.
That's a guess.
To me, it's a huge guess. I mean, I get the idea, 25 beeps now, and there's a fancy chart I did, folks. I can't emphasize enough how on a weighted basis, the first couple cuts from the elevated level we were at, it's sort of statistical noise. It's like bringing it in, if you will, and then it gets more serious. I don't hear like Steve Risciuto at Mizuho. I don't hear him telling me, Paul, that it's getting more serious. We got room to cut, but then what? Then what into January? And Let's get it up here right now. Your date calendar, folks, to set this up. That's this year. Hold on, I got to go here to 2025. I've never used the terminal before.
We know a guy.
January 29, late January, the middle of March, March 19th, and May 7 are those three critical meetings next year. An important report of consumption across the nation. Here's retail sales with Lisa.
This is breaking news from Bloomberg.
And we are moments away from it. Ahead of it right now, let's check in with futures. We have NASDAQ futures still down at 0.2%. Dow futures down 0.4%. We have S&P futures down 0.4 as well. We have the 2-year yield, 4.28%. That's up 2 basis points. The yield on the 10-year is 4.42%, and that's up about 2 basis points as well. We'll take it to the 30-year, 4.61%, and that's up about 1 basis point. Here come the numbers. We'll start with retail sales. This is for November. Okay, so the survey was for 0.6%, like Paul said, went up to about 0.7%, the prior 0.4%. Now you take out autos out of the picture month over month. The survey was for 0.4%, went down to 0.2%, which is still a little bit higher than the prior that was up about 0.1%. Then you take auto and gas out of the picture. The survey was for 0.4%, came in at up about 0.2%. That is the latest on that. We still have more coming. We have about an hour from now, we have a read on industrial production for November. We will bring that to you. Right now, the NASDAQ futures still down at 0.2%, 61 points. Dow futures down 0.4%, 207 points. S&P futures down 0.3%, 24 points. Checking in with the 2-year yield, 4.25%. Little change. The yield on the 10-year, 4.41%, and that is up about 1 basis point. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Looking at the top line number, revisions coming out about 8 seconds ago. And revisions lift importantly. The prior was 0.4. Mm-hmm. Now the revised is 0.5, which is more umphier. That's CFA talk there when you go umphier. And then the basic idea is retail sales, a top line number, came in a little elevated. We had a churn to the market. We had yields come in a little bit lower. The 10-year real yield comes in from a 209, 210 into 208. So this fractional move here. But again, I'm looking, I'll need the experts to weigh through here on what it means for GDP as 70% of the economy. But the answer, Paul, is the revisions were consumer enthusiasm, is how I'd put it.
I'll just call out the yield market, Tom, here. The 2-year Treasury, 4.25%. Pretty much steady here this morning. The 10-year only up about 1 basis point, 4.4%. So the bond market pretty calm here on the back of the retail sales data.
Tape. I don't think Bitcoin's correlated to retail sales.
I'm not sure what it's correlated to.
107,494.
Boom.
As well. Again, I'm watching the 10-year real yield. It comes in from a 209 to 207. Again, on retail sales, and there'll be a lot of good econometric work, including our Michael McKee getting into the paperwork. And of course, we look forward to Bloomberg Economics and Anna Wong's interpretation of retail sales into what it means for gross domestic product. DXY dollar fractionally stronger. Right now, joining us, Steph Guild, head of investment strategy at Robinhood. We get a huge response every time she's on because of the stereotype of Robinhood. And she'll say, look, we're pulling away from that and get into the more conservative. How memey is the market right now? On the Robinhood meter of memey, are we very meme stock right now?
We are not very meme stock right now. I actually think we're quite diversified in terms of the things that are rallying. Sure, post-election, you saw, Tesla sort of zoom, you saw Bitcoin zoom, and lots of other cryptocurrencies, but I actually think you have a pretty diversified set of stocks that have been doing well. Like you have everything from Deckers and Lulu to CRM and Avago. So I don't think it's very memey.
It's a new,
yeah.
I get a royalty from Mary Franklin
every time you do that. So, Steph, we love talking at this time of year to strategists about their year ahead outlook. What are some of the themes that you guys are thinking about for next year?
I think we'll stay. So I have a base case and then I have my risk, and I think we'll stay in the soft landing that we will be in as my base case, or that we have been in. I have a call on the S&P of 6,500, which is kind of on the lower end of the range of all the analysts out there.
Now you're a gloomster. My word, the last time you came in here, you were rocking the free world.
I don't know if I'd call it gloomster. I'd just say that I think what you've been seeing the last couple of years is earnings growth and returns being driven by the largest 10 stocks. You know, Mag 7 is really just was driven by Meta and Nvidia. I actually think you're just going to see a broadening, which is why I have a little bit more of a tempered view of the S&P 500 broadly. And where I do have a more positive view is in the mid-cap and small-cap space, but I favor mid-caps because I think they're just a little more stable, a little more diversified in their sector allocations.
What's going to drive this market higher? Multiples, earnings? It seems like we're already pretty fairly richly valued, I would argue, maybe.
I think in the large cap space, we're actually fairly valued.
Okay.
And the reason why I say that is because when you look at 2026 earnings growth expectations, it brings the S&P to around 19.5 times, and that's right around where the average has been in the last 10 years. Where we are undervalued is in the mid and small cap space, and so that's why I think you could see multiple turns. Small caps are actually 7 turns below where they are in their long-term average. Mid caps are 3 turns below where they have been their long-term average. And then I also think earnings growth drives that as well, the broadening. So it could be multiple things, but there are risks out there, of course. Namely, I think the potential of where the 10-year could end up going. I think
come on. I want to make some news today.
Okay.
T. Rowe Price, a reef over at T. Rowe Price is talking 6%. Can we get a Robinhood 7% worry?
I don't know about 7. I definitely, I don't know. We have to see where things go when it comes to tariff, where it comes with immigration policies. I think the market is absolutely pricing in deregulation, and that's probably the most obvious thing that will happen. And that's, I think, why crypto's gone up so much. But there's certainly a lot of, I'm worried about the tax thing. Like, being able to cut taxes to the levels that they're talking about is not going to be an easy feat. I mean, the debt ceiling is going to expire December 20th, and that's close to knocking
and,
down.
and Henrietta Trace yesterday, Paul, made clear taxes is later in the year. This isn't first 100 days.
Yeah. So, Steph, did you and your team, change your outlook at all the day after the election and maybe the days after the election? Anything change for you guys?
I think for me, there was a shift, and for our team, there was a shift in the view of Bitcoin in particular.
Oh, okay.
I think I've been, somebody who's kind of watched it, develop and take shape. And I think with a couple things have shifted for me. One is deregulation has shifted it for me, and I think the acceptance is going to broaden. And secondly, I do think with the growing deficit that we have and the fact that a lot of the policies that are being projected are not necessarily going to help that, I do think there becomes more and more of value to something that is limited in production, like Bitcoin.
Steph Gould with us with Robinhood after the retail sales report. Futures deteriorate, -20, then -24. Now we're cratering. We're down 0.4%. Deep correction there in the S&P 500. The VIX shockingly over 15. Go to cash. What are Robinhood people doing with cash allocation or the temperature that you and your Robinhood executives see? I don't need to know inside baseball, but like just basically what's going on?
You're still seeing a lot of activity when it comes to the core positions that people trade. You're not seeing a huge increase in cash, I will tell you that. And in fact, there's probably more investing happening than pre-election.
What's a typical Robinhood customer look like?
Median age, I should say, of 34.
That's median age.
That's median age.
Median age around here is 67 years
not
old.
The median.
Continue.
It's the next generation of investors.
Oh, thank you.
And
we are the world.
We have, I think broadly speaking, investors on average tend to be a little more biased towards men than women. So that's apparent in our customer base as well. And I'd say they're very long-term focused. Like, I know this is, and that's in line with their age, right? Like, you see them just investing in things, and when they go down, they add to it. And they really stick to their overall views. So automobiles, for example, tend to be a high allocation in our Robinhood Investor Index, and that's the belief in electric vehicles and that is the future. Tesla is obviously the dominant there, but then you also have an allocation to a view that people are spending on experiences, and so you have a lot of money invested in travel, for example. And then, of course, technology, I believe they see things like the large cap technology names as almost utilities now.
Okay.
And because that's sort of part of our everyday life.
We're going to talk to Bill Priest about that in the next hour, the giant of free cash flow, to see if there's utility characteristics there. Steph, don't be a stranger. Steph Guildwood is head of investment strategy at Robinhood. A really smart outlook there. She's got her massive Gloom 6,500 on SPX. I'm kidding, folks. It's amazing. And it's like a responsible statistic. There's others out there really reaching higher. Ed Yardeni making a lot of news. John Stolfus at OPCO, he's got a 7,000 plus handle on it. I'm sure we'll see some, if this joyride continues, we'll see continued ratcheting up. I thought Ben Snyder, Goldman Sachs, was quite good.
Yeah, there's
trying to just fit it all together.
Yeah, exactly right.
And he made clear that short-term, long-term, there's some real disparate views there. Our view is retail sales really doesn't move the market all that much. Negative 23 on futures, sort of where we were. The 2-year, the Sweeney yield comes in a little bit, 2 basis points, 4.27%. We're nowhere near a 5% yield on this day where T. Rowe Price says, look for 6%, back to 2,000. Got a huge response to our Matchbox 20 play.
Sure, why not?
Huge response.
90%.
Who are those guys? Yeah. With our news in New York City, John Tucker.
And Tom Paul, Lisa, President-elect Trump failing to convince a judge to set aside his conviction in the New York hush money case. The New York State Court Justice Juan Merchan rejected Trump's argument that the trial was tainted by testimony and other evidence that should not have been allowed under a July U.S. Supreme Court decision that granted presidents broad immunity from criminal charges. Bob Van Voorhis is a legal reporter for Bloomberg News.
Judge Merchan ruled that Trump had failed to preserve most of the objections to the evidence that he objected to. Meaning that the judge is unable to rule on it because he didn't, object at the time. He ruled also that even if he had preserved those objections, they would not fall within the immunity.
Bloomberg's Bob Van Voorhis says it's unclear if the case is going to still proceed to sentencing as the president-elect continues to challenge the verdict. Donald Trump spoke to reporters for over an hour at his Mar-a-Lago, Florida club, covering a wide range of topics. He says, among other things, Ukraine needs to reach a deal to end the Russian invasion.
Got to be a deal. No, got to be a deal. Too many people being killed. That is a war that's too many people. Got to make a deal. And Putin has to make a deal too.
Hours after Trump spoke, Ukraine claimed responsibility for the assassination of the head of Russia's radiological, chemical, and biological defense troops in a bomb explosion in Moscow. Another deadly school shooting. A 15-year-old student killed a teacher and another teenager with a handgun Monday at a Christian school in Wisconsin. Madison Police Chief Sean Barnes.
She was a student at the school, and evidence suggests she died from a self-inflicted gunshot wound.
The female student also wounded 6 others at a study hall at Abundant Life Christian School, including 2 students who were in critical condition. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, and Lisa.
We're going to get a little bit of retail sales in here. I can't emphasize enough, folks, like brilliant instant analysis, team coverage with Lisa Mateo on something like the jobs report, or even more so retail sales, just begs, would Molly Smith actually go through the data as she has done? Molly Smith writing here for Bloomberg, U.S. retail sales beat forecasts on jump in car purchases. Some of the notes, excluding auto sales, climbed 0.2% in 7 of 13 categories, posting increases. I believe that means 6 of 13 categories saw a decline.
Right.
I'm doing that math at my top. But Paul, the certitude. Lisa's got an incredibly difficult job of like the headline numbers.
Yeah.
There's so much more information beneath it.
No, there is. And again, so it generally kind of in line with slightly better
control group
than expected. The control group kind of came right in line there. So the retail sales, I don't know, pretty solid.
Molly Smith to the rescue. E-commerce sales jumped 1.8% as Black Friday and Cyber Monday promotions generated massive sales. The Mateo House putting America over the top.
Absolutely. I mean, there's I think the Mateo family is in the control group. I think they're officially in the control group.
The control group. Is John Tucker in the control group?
No, please. The guy hasn't bought anything since, I don't know what. Well, we're getting him the hammer.
Stay with us. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, still pointing to a lower open, and this is after retail sales increase in November 0.7% after a rise 0.5% gain in October. Now, a big part of that, Tom said it was a boost in car purchases. We get more data in under an hour from now with a read on industrial production for November. NASDAQ futures down 0.2%, 65 points. Dow futures down 0.5%, 221 points. S&P futures down 0.4%. Or 26 points. The 2-year yield, 4.27%, up 2 basis points. The yield on the 10-year, 4.43%, and that's up 2 basis points. We have Brent crude lower at down 0.8%, $73 a barrel, and spot gold at $2,642 an ounce. The Bloomberg Dollar Spot Index is little changed. Few stocks on the move. We have shares of NVIDIA continuing to fall, down more than 1%. The stocks closed down about 1.7% yesterday, but even after that recent slump, NVIDIA still remains up 167% this year. Meanwhile, you have shares of Broadcom. They're falling now, down nearly 1% after closing at a record high yesterday. And then shares of AI server company Super Microcomputer. They're on the rebound. They're up more than 2% following news it'll be removed from the NASDAQ 100. That is the Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Because the way it works here, folks, is we have a whole team at Bloomberg Surveillance where if we have a Democrat on, we try to have a Republican on. If we have a Republican on, we try to have a Democrat on. And I got a memo from senior management, and it had to do with Jess Manton, which is there was way too much Aggie talk.
Yep.
I mean, it was like hullabaloo, Canuck. And the elites, the Longhorns in Austin, weren't getting enough coverage. I go, well, get the one person we know from Texas. Joining us now from Austin and a Longhorn, Bert Krotz joins us, legendary with Invesco in the pulse of real estate in America. What is Austin like when you were there versus the madness now of Michael Dell's Austin economic boom?
Well, first you got to work on your guest list if you have too many Aggies. So we're going to talk about that.
My father was class of 15 Aggie. I was weaned on the Thanksgiving game. Austin is in a boom. Yeah. You see that at Invesco 100%. Through their real estate. Does it continue, or is it, OMG, too much exuberance?
It's been a little too much exuberance of late. It's been overbuilt on the multifamily side, to an extent on the student housing side, but that's short term. The trends there, whether it's demographic shifts, whether it's company and corporate relocations, cost of living, quality of life, and then all things, demographics are a positive for Austin going forward.
Invesco Real Estate, where do you guys see the best opportunities now? Because I don't know where to go. And I'm not sure where my mortgage rates are going. I don't know what's going on.
Paul's looking at 4,000 square feet on Billionaires Row.
Exactly.
So, we think unequivocally the best opportunity today is real estate credit. It's the asset class that most haven't heard of and should have. When you look at private credit generally, it's a trend that we've seen in the retail investor base, and it's getting somewhat crowded. But real estate, continues to be a four-letter word, at least in most investors' perceptions around office and other headlines that a lot of times I would argue are misleading or overstated. Real estate credit, we've done $3 billion of loans this year. These are
making loans?
Making loans. So we're not buying legacy.
Okay, so this is, I want to build a multifamily structure in Austin. I don't go to my local Austin bank. I go to you guys?
That's right. That's right. So if you think about what happened, about a year and a half ago with the mini banking crisis, starting with Silicon Valley Bank, and then ending with New York Community Bank, we saw the pandemic drive stimulus, which drove obviously inflation, which drove rates, and that drove the dislocation. And it's very unusual when you compare it to the global financial crisis, where you had a recession, rates went down, but spreads widened. And here, for real estate credit, you get the best of both worlds. You got wide rates and wide spreads.
Rob Waldner from Invesco called me up at the bottom of the pandemic, and Rob goes, Tom, Simon Property Group. Of course, I didn't listen to Waldner. I got SPG, iconic, up 239%, 30% per year off the COVID bottom. In this zip code, doom and gloom about office real estate. You live this every single day. What portion of American real estate is doom and gloom right now?
Yeah, so less than people think is the short answer. So when you look at office more generally, it's just less relevant than it was even 10 years ago. So the index off of which commercial real estate is benchmarked, it used to be 40% in 2015. It's now 15, meaning office exposure. 1.5. 50%
is the doom and gloom.
That's office. Generally, doom and gloom is even less than that, Tom. So when you think about, there's 5.6 billion square feet of office in the U.S. 8 to 12% of that is prime, highly amenitized, and that honestly is strong and getting stronger. It's the muddy middle that's the issue. A lot of people predicted that it would drive a banking crisis, and we just haven't seen that happen. And we're not expecting to see that happen. So I would tell you that the green shoots across commercial real estate, office is just less relevant, less significant. It's only 15% of transaction volume today, and it's already been written down somewhere between 40 and 50%. Let's move on and focus where there's opportunity.
All right, but I'm still concerned about the capital availability for real estate. Is it out there if the banks aren't as robust as they used to be? Is there equity capital? Is there credit out there to really try to invest in real estate these days?
The short answer is it's much less than it was.
Okay.
It's coming, but therein lies the opportunity, Paul. So when you think about real estate credit, non-bank lender market share used to be, call it 5 years ago, less than 10%. It's now 25 to 30. So those of us that are filling that void are doing it in a significant way, and I don't expect that to change. If you look at the stimulus coming out of COVID, it went into bank deposits. The regional banks way overdid the real estate lending, and that's because that's where they could find yield. They were forced to pull back as values corrected. That created an opportunity for us. Your second question, on the equity side, it's coming. If you think about where, just denominator effect, think about flows for a second. The S&P up 25% last year, 30% this year, fixed income spreads being tight. You look at where is their opportunity, where is their relative value? Real estate values have corrected, the election's over, and rates have been cut. So you have these psychological hurdles that we've passed, and REITs have ripped. 13% last year, 13% this year. And historically, if you invested in private real estate coming out of the tech wreck in 01, the GFC, the global financial crisis in 09, you made mid-teens unlevered 5-year forward returns, there is a FOMO going on. There's a fear of missing out, and capital's there.
And Bird is like 40 to 1 leverage. I mean, this is killing it. Tell me about multifamily. Tell me about rents nationally. Lots of people listening on their commutes across America say, Tom, it isn't New Jersey. Rents are going down. It's a weak, tepid market. What's a train wreck going to be in multifamily?
I don't think there'll be a train wreck, but there is pressure right now because just like real estate developers do when there's excess capital, they overbuild. And that's what you saw happen coming out of COVID, so 21 and 22, and all that supply has hit, Tom, in the last 6, 9, 12 months. So you've seen vacancy rise a little bit for multi, you've seen rent soften.
Right.
We think that's temporary.
T. Rowe Price makes the headlines today, 6% yield. Big uproar about this. Back to summer of 2000. Faith Hill was killing it then. Okay, if we get a 6% yield, what does that do to the Invesco real estate world?
6% 10-year?
Yeah.
It's significant. It's significant. And, you know, right now in the low to mid 4s, that's a normalized environment, and real estate has adjusted to it. If you get 6%, the relative value argument is challenged. Now, the benefit, and Paul, we were just talking about, the credit opportunity will be that much bigger and that much more attractive. So you just need to know how to play it.
You raising funds now?
We are. So we're seeing flows pick up, generally speaking, across the industry, not just in the institutional side, but in retail also. And it goes back to the point, if you look at the S&P and you've got a forward, multiple in the mid-20s, you've seen the REITs run up, and you haven't allocated to real estate in 2 years, and you believe if you're buying in below replacement cost, 20% off a peak, there should be value there.
Great.
We are starting to see investors say, I've been waiting, now is the time, and if I don't hurry, I'm going to miss it.
Bert, this has been great. Don't be a stranger. Bert Crouch with Invesco on his, what we could put him on the day calendar. Every time A&M wins, we could, get him in here.
I won't be on very much then. If you could go with the Longhorns, that'd be great.
Tell that to Purdue. Bert Crouch, thank you so much with Invesco. Hey, T. Rowe Price says 6% yields is feasible. What does it get back to? How about the spring, the summer of 2000? Faith, a Stephanie Bentley ballad.
I can feel you breathe, it's washing over me, and suddenly I'm melting into you. There's nothing left to prove, baby, all we need is just to be caught up in the touch, slow and steady rush. Baby, isn't that the way that love's supposed to be? I can feel you breathe.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, recovering from the Lions' loss. Lisa Mateo with us. I'm tearing up right now. In this hour, it's like a holiday hour. Carl Weinberg, later in the hour, on the many economies collapsing right now. The icon of free cash flow, William Priest, at TD Epoch. Bill Priest will join us, the definitive book of your cash flow season. And a guy named Julian Emanuel with us for the entire half hour. It's too much.
I know.
I mean, it's
Solid
just,
hour.
I get emotional here in a Christmas season. Because of that, we're going to get right to it. What you need to know, retail sales came out with revisions, sort of like, a little more buoyant than all. Futures were negative 24. They went down. They come back, negative 22. The VIX over 15, cause for concern, 15.08. What am I watching? I'm watching the 10-year real yield, Paul, in 2 basis points to 209 to 207.
Yeah.
What do you see?
I'm looking at the, again, the 10-year Treasury that people kind of benchmark a lot of stuff against. 4.40 right there. WTI crude oil weaker, below 70.
Below
That feels
70.
like it's the new normal. We're kind of hanging out here at $70, but our friends in Texas, they make money at $70. I watch Landman because I watch Landman.
I go, Sweeney's watching Landman.
Yeah.
Pray tell, what are we doing in Landman?
Oh, we're drilling for oil, wildcatters, and all that kind of crazy.
Everybody hates everybody else.
That is a tough way to make a living down in the oil patch. I mean, if I've learned nothing other from that show.
Do they all hate each other?
I don't know. It's just a tough way to make a living. Now, the guys make good money down there, but boy, it's tough work down there. Being on an oil well, the stuff just doesn't come out of the ground easy.
It's a manly job.
It is.
Okay,
I don't know.
Paul Sweeney with your Landman survey. I'm watching Silo, renewed by Mr. Cook.
Okay.
Season 1, Season 2, they're in right now.
All right.
And they just green-lighted Season 3 and Season 4.
Bring it.
I don't know if anybody's watching it, but it's
who knows? There's no
it's
Nielsen
it's
ratings.
gloomy. It's sort of like a Julian Emanuel report. Let's do this. Let's get Lisa out of the way here from the Interactive Broker Studios, the Bloomberg Business Flash, the always important Lisa Mateo.
You got it. We have futures still lower. This is even after data show the consumer is still going strong. Retail sales rising faster than expected last month. Sales at retailers and eateries, they rose 0.7% in November from October. Now, in about 15 minutes from now, we get some more data with a read on industrial production. NASDAQ futures down 0.2%, 57 points. Dow futures down 0.4%, 186 points. S&P futures down 0.3%, or 21 points. The 2-year yield 4.26%, up 1 basis point. The yield on the 10-year 4.40%, and that is little change. To currencies, the Bloomberg Dollar Spot Index is little change. The yen, well, it actually snapped a 6-day losing streak. It's right now up about 0.2% at 153.73 against the dollar. Euro weaker, British pound stronger, and yes, it is cryptomania continues. Bitcoin above 107,000. A few crypto-linked stocks just for Tom here. Coinbase up 1%, MicroStrategy up nearly 1%, and Mara Holdings up more than 1%. Let's check in with shares of Pfizer. They're up more than 2%. It forecasted 2025 revenue in line with estimates. And then we go to shares of Tesla up more than 2% after a close at a record high yesterday. That was up about 6.1% yesterday. Now, as far as earnings this week, tomorrow General Mills before the bell, with Lennar Micron Technology after the close. That is your Bloomberg Business Flash. Paul and Tom.
Thank you, Lisa. You know, we do want to give you breaking news, and we're doing this for Rachel from West Lafayette. Her kids are addicted to Bluey.
Bluey?
It's like Cocoa Melon. Lisa, did you know this?
I do. My niece and nephew are all over it. They have, what are they, from Australia? They have Australian accents, so now my nieces and nephews are speaking in Australian accents.
It's like
Great.
the new Cocoa Melon.
Yes.
It's like Bluey is like the biggest deal. Disney will release Bluey.
In
It'll
film,
probably
in
be like
cinemas in
Moana
2000.
2.
Yeah,
you know.
I guess.
There we are.
There you go.
For the entire FR, Julian Emanuel with us right now. I can't, let me frame this for you folks about how I cheat every day. Is as widely understood, I don't have an original thought. I read and read and read, and when earnings season starts, there's not a second or a third read. Julian Emanuel is the first read of the moment as he parses out earnings. It's like an Evercore ISI thing. It's like 2 paragraphs long, that's all. He speaks English, it's great. He joins us in the studio right now. Everybody's double-digit earnings, 12%, 14%. Come on, it always ends in tears. You're beneath that. How beneath double-digit earnings forward are you?
So we're forecasting 9.6%. But the good news is that when you look at the way things tend to progress, you're always over-optimistic in terms of bottom-up estimates at the start of the year or the year prior, and they tend to fall. They haven't the last few years because of sort of post-pandemic effects, but we think this is going to be part of the return to normal.
Paul wants to jump in here, but I got to ask, were you at 10.1 and Hyman got out the black, the little black pen and just crossed it out and wrote in 9.6?
We don't round.
We don't round. All right. So, Julian, given that kind of earnings, I know I'm sure you put out your 2025 outlook. What's your 2025 S&P target?
6,800.
And how do we get there?
We get there a combination of things. The things that have led this bull market cycle are going to continue to lead, albeit with more volatility than we've seen, because at 25 times earnings in the aggregate index, there's going to be more volatility by definition. The Trump administration will cause more volatility, as they did in 2018 when we were talking about taxes, tariffs, and the border. And small caps. For us, small caps are underloved, overlooked. There have been flows. We think there's further to go.
So like at 6,100, you're going to 6,800. How does your equity analysis dovetail in to Edward S. Hyman's economic analysis right now?
So Ed is basically been very consistent on his inflation call. He continues to think that the trend of inflation is lower. Now, the way we'd think about the data the last couple months, and you'll remember going back to March and April, you had that sticky patch where there was skepticism that inflation would continue to move lower. It roiled the stock market briefly. That's how we see the next number of weeks evolving, but that course is set towards 2%.
Did you guys change or alter your outlook the day after the election? Did that change any way you're thinking about 2025?
We did.
Okay.
We did. And it's less about Republican or Democrat, though, you know, the evidence is relatively clear that certainly from a deregulation standpoint, that the Trump administration is likely to be more business friendly. But the biggest thing for us was the clarity of the outcome. The fact that we weren't having contested politics or anything, that freed up the animal spirits.
What sectors do I need to lead? I mean, I've had 2 years where the S&P's grown 20%. I mean, do we not take a breather, or do the AI tech continue to lead us forward?
So we think that what has led will continue to lead: consumer discretionary, communication services, and infotech. It is part, if you think about how bull markets develop, what this bull market is missing that you have in every bull market is a sense of, you know, sort of wild-eyed enthusiasm. You can argue that there are parts of the market that we've seen in recent weeks that have had that kind of wild-eyed enthusiasm. Certainly anything to do with cryptocurrencies or anything like that. But those are small in market cap, and the way to think about that is like the meme stocks, SPACs, and profitless tech in 2021. Those can top, but the bull market leaders continue to lead through the year.
Which fact, don't give me this momentum stuff. Julian Emanuel is as far away from momentum as I've ever seen. Is there a factor that sticks out right now, or is it just earnings and cash flow?
So actually, the factor work that we've done is the biggest sort of long-term theme is stocks that are able to buy their stock back, high buybacks. Because if you think about it, is regardless of how this landing unfolds, if it becomes
if you have fewer
bumpy,
shares, it works.
Right, and you have the cash to actually support, you know, cushion the volatility in your stock when you get those inevitable.
This is such a treat, folks. We're going to come back with Julian Emanuel, and we're going to spend the entire block on free cash flow. The privilege of going from Julian Emanuel of Evercore ISI over to Bill Priest in his book, Free Cash Flow and Shareholder Yield. You know, this is just what it's about, folks. We'll come back on free cash flow and his 9.6% earnings growth call here as well. Futures rally, Emanuel lists the market. We were negative 24. We're now negative 21 on futures. With our news in New York City, John Tucker.
All right, Tom Hoy and Lisa, legal setback for Donald Trump, the president-elect, failing to convince a judge to set aside his conviction in his New York hush money case. A New York State Court Justice Juan Merchan rejecting Trump's argument the trial was tainted by testimony and other evidence that shouldn't have been allowed under a Supreme Court decision that granted presidents broad immunity. A Bloomberg News legal reporter Bob Van Voris expects Trump to escalate his legal battle.
There's no question that Trump, if the decision ends up being adverse to him, he will bring it before the Supreme Court. There's a number of rulings that have to come down before we get there, but he would certainly challenge it.
Bloomberg legal reporter Bob Van Voris says a Manhattan jury in May found Trump guilty of falsifying business records to conceal a $130,000 payment to a former adult film actress. President-elect Trump's legal issues did not come up at his wide-ranging news conference at Mar-a-Lago, but he did cover an array of topics, including the war in Ukraine. Trump says President Vladimir Zelensky has to be ready to make a deal.
Putin has to make a deal, and Putin would have never gone in if I was president.
The President-elect Trump speaking before Ukraine claimed responsibility for a bombing this morning in Moscow that killed a top general. And the search for answers in Monday's deadly school shooting in Madison, Wisconsin continues. The 112th school shooting this year in the U.S. at a Christian school called Abundant Life has the unusual distinction of having a female shooter who was only 15. Police say she opened fire in a classroom during study hall, killing a fellow student and a teacher and wounding 6 others before responders would find her with an apparent self-inflicted gunshot wound. Madison Police Chief Sean Barnes says 4 of the wounded are still hospitalized.
6 other students and a teacher were injured and taken to area hospitals. 2 students remain in critical condition and have life-threatening injuries.
A motive for the shooting not immediately known. And black student enrollment at Harvard Law School dropped by more than half after last year's Supreme Court decision banning affirmative action in college admissions. This fall, Harvard Law enrolled 19 first-year black students. That's only 3.4% of the class, the lowest number since the 1960s. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
Disney to do Bluey. John Tucker, thanks so much. Disney to do Bluey. Vet Bill watches every day.
Sure.
Nuts about Muffin.
I'm not sure we can monetize that viewership, but
I don't think we can at surveillance, but Vet Bill has such a crush on Muffin. Muffin is, Bandit is like the dad. And Bandit's brother's Stripe, and Stripe's bratty kid is Muffin.
All right.
And Vet Bill's just loving it.
All over. There you go.
It's good. Come on, look at
bring it to the big theater,
it's
big
huge.
screen.
Not Kennel Fee? Kennel Fee doesn't watch?
Kennel Fee watches, but not with the intensity of Vet Bill. I mean, Kennel Fee, you know who Kennel Fee likes?
Who?
Coco.
Okay.
Coco's the pink
Coco
poodle.
Mel? Yeah.
Okay. No, he's a pink poodle.
Oh, the poodle.
Yeah, there's a poodle. It's like a whole community of Australian dogs. And there's gonna be like Moana 2.
Yep. Buy the stock, I guess.
Yeah, Rachel from West Lafayette briefed me on this. Thank you so much for that. She's like living Bluey at home. We're with Julian Emanuel. We're going to come back and talk free cash flow into Bill Priest. That's what this show's about. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. Or we got futures still pointing to a lower open after resale sales increased at a pretty firm pace in November, up 0.7%. A big part of that, a surge in car purchases. Now on to more data that's just starting to come in. We're talking about industrial production for November. So the survey was was for 0.3%, went down 0.1%. That was the prior was down about 0.3%. That was revised up to a fall of about 0.4%. So we get to NASDAQ futures down 0.2%, 49 points. Dow futures down 0.4% as well, down 201 points. S&P futures falling 0.3%, 22 points. The 2-year yield 4.26%. That's up 1 basis point. The yield on the 10-year 4.40%, and that is little changed. The Bloomberg Dollar Spot Index, that is little changed. Stocks on the move. After closing lower yesterday, shares of Nvidia continue to fall. They're now down more than 2%. And then after closing at a record high yesterday, shares of Broadcom, well, they're falling. They're down about 1%. And finally, shares of buy now, pay later company Affirm down 3%. Word that it plans to sell $750 million in convertible notes and use those proceeds to buy back some of its stock and other securities.
Thank you.
Oh.
Thank you.
It's a lot
Jim
going
Chanos, the great Jim Chanos of the New York Historical Society and short seller, had a tweet out on that, Lisa, last night. They're doing convertible paper, which I believe converts to equity, to buy back stock.
Crazy.
Which is, you know, Mr. Chanos was terse in his comments. I'm not going to let Julian Emanuel, his lawyers are going, Julian, just shut up. He's got an earplug in his ear. Ed Hyman's there. Julian, don't you comment on a firm. Thank you, Lisa, for that, and thank you, Jim Chanos, for always making us smarter. Okay, clinic time. Bill Priest will join us here in the next half hour. Legendary on free cash flow. We got lucky. Julian Emanuel darkened the door and had the privilege of working for Bill Priest years ago. How does he treat free cash flow versus different from mere mortals?
It is literally the Bible of the rationale for investing in corporate America. And it's actually more than that when you think about it. I worked at a company called BEA Associates, which Bill Priest was one of the founding partners in the late 1990s. And the interesting confluence of that is you've had 2 back-to-back 20% plus years for the first time since the late 1990s. And that's the kind of environment that we're in. And that's the kind of environment that dictates an even greater focus on the idea of free cash flow.
How do you tell good free cash flow from bad free cash flow? That basically is 1/3 of his book.
Well, in my opinion, is the way you do it goes back to buybacks. If companies are actually making the statement that they're able to buy back their stock, then you know that the quality of the cash flow in aggregate is better than not.
Which brings me to my interesting free cash flow buyback conundrum. If I'm Apple Computer and I got gobs and gobs of free cash flow, yet I've got a dividend yield less than 1%. What's up with that? What's Tim Cook thinking over there?
So the academic literature is mixed. Okay, you can make the case that in an environment where the Fed has restored a price of money, that there may be a greater premium in the future for dividends, at least psychologically, but that's not the case for now. And again, when we think about it and we think about what the last couple years have entailed, and that has been 2023, we all thought the recession was coming. It didn't. 2024, it seems like there's soft landing is the mantra, but we know that recessions happen cyclically, whether you're in the roaring 1920s, the 1950s, the 1990s, really the only period where you had a prolonged time without a recession. That's where you want to know that you're able to buy your stock back, that you're able to be creative in the ways that you compensate shareholders.
Is AI still a trade for you? And if so, how do you play it? Or has it already been played out with the NVIDIAs of the world? But Broadcom's kind of showing in the last few days that maybe there's still legs to it.
Well, so our view is it actually isn't a trade.
Okay.
It is buy and hold secular theme. And what the interesting thing is that if you look at the last year or two, we've had this bump in productivity that really hasn't been attributable to AI. And it's our view that when you think about 2025, the upside surprise is likely to come by how much and in what kind of creative ways corporate America actually deploys AI.
So is it still kind of, I mean, some people are just feeling like, all right, I kind of got the euphoria of, boy, that people are going to spend a lot of money on this AI thing and there's a lot of CapEx. But now the question is, are some of these companies getting a return on this capital spending? And could that be a headwind for just the theme?
Well, when you think about our thesis of volatility in an up market, there will be times when the perception is that, and the AI leader, the leading stock, as we all know, has really not been performing terribly well the last couple of months. So that encourages that kind of psychology. We think those are temporary potholes with a long-term trend that's got a lot further to run.
Brian Belsky, the other day, like you have to participate in the markets. You got to be in the market. You got to enjoy the bull market. Belsky of BMO makes the distinction of a cyclical bull market versus something most people without gray hair don't know, which is a structural bull market. Ed Hyman and I, of a vintage, remember structural bull markets. Do you agree there's a permanence to this, just based on American GDP, our nominal GDP, and the productivity that Lisa Mateo just mentioned?
So it is certainly what the ongoing tailwind into 2025. But I will say that a lot of our client conversations center around, the durability of the American preeminence, and how and when do you reallocate towards the rest of the world?
Towards international. How could you do that with the strong dollar that we've got? What does that say?
You can't. We are waiting for two things: a turn in the dollar, which perhaps a geopolitical resolution between Russia and Ukraine catalyzes. The other thing that we're waiting for is a turn higher in China bond yields. China bond yields should be worrying people because it looks a lot like Japan in the 90s.
I retweeted that last night. It was shocking. A second derivative of that deflation. Mohammed El-Arian featured it this morning at Cambridge. I mean, what does the China second derivative of yield signal to Julian Emanuel?
Well, in fact, as it's been for the most part for a number of years, it could actually be the thing that causes the catalyst that causes the resumption of inflation to continue falling in this country. Although, in large part to us, it really is something that's more concerning because it's clearly a geopolitical hotspot.
All right, do I have a valuation concern here? Is that a headwind for me, or do I strip out the Mag 7 and I'm okay?
If you don't have a valuation concern, that's where we want to start being defensive.
Okay.
A lot of our clients are really focused on that, as they should be, as they should have been the entire year. But again, valuation alone doesn't end the bull. It's either recession or irrational exuberance, and we don't see either of those on the horizon.
This has been great. Don't be a stranger. Thank you so much for all your work for surveillance and the issue. Julian Emanuel, I can't say enough about his work. We protect the copyright of all of our guests. Evercore ISI literature from Hyman and Emanuel. Go to them for it. They have the great shop over there in the vicinity of Fifth Avenue. To go from Julian Emanuel to William Priest is What's It's About. Mr. Emanuel, he's chairman at TD Epoch. I don't know if he's emeritus or whatever. He's like Bill Priest. I can't see Bill Priest doing anything but working your basic 70-hour work week. I mean, that's the way he rolls.
I'm with him on that one.
But I just put the book out on Twitter, on LinkedIn, Free Cash Flow and Shareholder Yield. It is a rite of passage. It's short. It's not, 800 pages of Fibonacci calculus. It's really short, really direct, and also somewhat controversial. I really want to point that out. But to have Bill Priest with us after Julian Emanuel is what the show's about. Futures negative 24. The VIX, it skyrockets out to 15.09. I'm trying to make some. Sweeney talking oil, 69.93 a barrel. Craters. Stay with us in your commute. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Well, we are just one day away from a Fed decision on interest rates. We also had more economic data out this morning with news that the holiday shopping season, well, kicked off to a pretty strong start. Retail sales rising faster than expected last month. All of that said, let's get to the opening numbers. We'll start with the S&P 500. Well, it's down 0.4%, 29 points at 6,045. The Dow down 0.4%, 184 points at 43,521. And finally, we get to the Nasdaq. There it is, down 0.3%, 76 points at 20,097. We have the 2-year yield, 4.25%. That's little changed. The yield on the 10-year, 4.39%, and that is little changed. We'll check in with Brent crude at $73 a barrel. WTI crude $69 a barrel. We have spot gold also lower, $2,641 an ounce. To currencies, the Bloomberg Dollar Spot Index is little changed, and we have Bitcoin above 107,000. So at the open, let's check in with Coinbase up more than 1.5%, MicroStrategy up more than 1%, and Mara Holdings up nearly 3%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. Joining us now, William Priest, identified with Epoch for years. You just heard Julian Emanuel with raves about the privilege of working with Mr. Priest years ago. In 2007, Bill Priest released the definitive short read on free cash flow and shareholder yield. It's in English. It's short. DiCaprio was awesome in the movie. Unbelievable. In 2007, Apple was $5 a share. It's now $250 a share. The growth of Apple, revenue, iPhone, this and all that, it was mostly Bill Priest, just growth of free cash flow, right?
That's the truth. They also had a lot of new products that took big market shares.
How do you determine good free cash flow in 2025 from troubled free cash flow?
Well, it all starts with the allocation of free cash flow and the methodology thereof. So, for example, in any business, it could be a lemonade stand. We don't have time to go through the lemonade stand example, but at the end of the day, you have to define it. So free cash flow is the cash available for distribution to shareholders after all planned capital expenditures and all cash taxes. Now, once you get that number, there's only 5 things you can do with it. And if you cannot earn an amount of money above your cost of capital, let's say for the sake of argument, your cost of capital is 8, 9, 10%. You have to earn more than that, otherwise you are taking value away from your entity. So there's only 5 things you can do with this dollar cash flow. You can pay a dividend, buy back stock, pay down debt. Those are forms of capital return to the owners of the business. Or you can reinvest and acquire. Now, we built 2 products around this. One was our shareholder yield product, which the book was all about. That was the identification of those companies who basically say, you know what, we can't earn our cost of capital with all of the cash flow that we have, and we're giving it back through one of these 3 forms. That became a $20 billion product.
I mean, Paul wants to get in. We're having a Duke love fest here, folks, with Bill Priest and Paul Sweeney. Paul, jump in here, but the heart of the matter is Bill Priest was lonely when that book came out in 2007.
Well, being a former corporate lender, free cash flow is important because that's what pays me back. So are there companies, what's a company that in your career has been really good about managing their free cash flow?
Well, it comes and goes. There are times when a company should be giving back the money because they don't have the reinvestment or the acquisition targets that make sense. Or it's fantastic for them to acquire. We did the other side of this recently. We have what we call a capital reinvestment product, where those companies who you can identify, and the secret sauce there is this. We have data on thousands and thousands of companies. And the trick is to look at the return on incremental capital, what's called ROIC, ROIC, and look at that compared to the cost of capital, the WACC, weighted average cost of capital. The spread between ROIC and WACC, it turns out in a good company, it persists. And you can look at it with all the data we have. We have data going back decades. Those companies continue to be top quartile.
Okay, so we do that in the Bloomberg on the WACC screen. We're not going to turn this into a CFA lesson, but the bottom line, Bill Priest, is everyone listening and watching is living Mag 7. They didn't exist in 2007. You got, let's say you got the 8th edition coming out. Your chapter on Mag 7, free cash flow, WACC, and ROIC, can they sustain that?
Many of them can. Don't know for sure all of them. The secret sauce, though, is the substitute of bits for atoms. So let's take information. It comes to you in the form of bits. Atoms would be the desk in front of me, this microphone. We're made of atoms. If you run a company and you can substitute technology in the form of a bit for labor, which is the form of an atom, and hold your revenues constant, your margins go up. And if you can substitute a bit, think selling something over the internet as opposed to a physical store, and hold your revenues constant, your sales per dollar of assets go up. So if you were to go back and just look at return on equity, if I can substitute technology for labor and physical assets and hold my revenues constant, my ROIC goes through the roof. And those companies, every company should be focusing on that gap, and how do I substitute technology for labor and physical assets?
Are those returns on invested capital relative to the cost of capital today enough to support this market? We've had 2 years of 20% returns.
Totally agree with you. I think the market has a real valuation issue. We've had 2 back-to-back years of over 20% in the market, and I think that's very difficult. So the question is, can you sustain the discount rate? Is the discount rate going to go up or down? It's going to be a struggle, in my view. When you think of when the Berlin Wall fell in 1989, for over 20 years, we created the most efficient supply chain the world has ever known. Now we want to go to onshoring. We want security of supply chains, not efficiency. You can't do that without inflation. You can't bring all that manufacturing capacity back here without inflation. That's going to be a burden for the new administration to deal with as well.
You've been around the block a few times, Bill. What do you make of this crypto stuff? Tom Keene is all over Bitcoin. I mean, he's been day one on top of it. What do you think?
Well, I've always been suspicious, and I've been wrong with regard to owning Bitcoin. I've never thought of Bitcoin as being money. So there's a really good guy you should get on your show sometime, Eswar Prasad, ESWARPRASAD.
Very familiar with him. He's been a huge supporter.
Okay, he's fantastic. He is the best guy in money in the
It's okay he went to Cornell and not Duke.
It's perfectly fine, perfectly fine. But money does 3 things. To be money, you have to do 3 things. Medium of exchange, medium of exchange, a value, has to be a way to measure value. And the problem with money, it is a unit with Bitcoin, it is a unit of account, and it is a medium of exchange, but it is not a store of value. That's the problem. And so you're not going to see legal trade done much in anything other than dollars.
One of your epic portfolios, number one holding, JP Morgan. How's Mr. Diamond doing? Is JP Morgan is an entity showing good use of free cash flow and good use of shareholder yield?
Well, I would defer to my analyst to a large extent on that, but he's one of the great managers in the banking business. There's no question about that. Right. And anyone that's owned his stock over the last 10, 20 years, they're very happy.
Are we dealing with monopsonistic tendencies in this country where we're just doing a big national roll-up into large cap, a la Mag 7, a la banking dominance of JP Morgan and Bank of America and the rest?
Consolidation has always been there. The question is it value add to the buyer? And if you can demonstrate value add, it's probably going to continue. But we have lots of new companies being formed every year. So we're not without innovation.
Can you ask Priest how UNC got Belichick and Duke didn't? You know?
I'm happy with our coach, Manny Diaz. I'm happy with the Duke coach.
Belichick going to 5 years at $50 million or something like that.
Yeah, it's like epic money.
Well, I think what's interesting is will he be able to relate to the players? It's a big difference relating to undergraduates and then.
Yeah, it's like when Bill Priest was with Julian Emanuel. He's like, who is this twerp?
Right, exactly.
Get one more question in here.
Bill, did you and your team change your investment outlook the day after this election? Did anything change for you guys in terms of how you think about asset allocation or investment opportunities?
No, we haven't changed anything yet. It's all about finding the companies that are good capital allocators, and I think they will see us through good times and bad times.
Mrs. Keene emails in. She goes, how come Bill Priest is so cut and chiseled? What's the secret? Vitamin D3? What are you doing? You're still working a 70-hour work week.
Well, I wouldn't say it's 70 anymore, but it's a lot. It's I love the game. The game is incredibly challenging.
Is the game fair for our listeners and viewers?
Yes, but you're going to have to do your homework. You're going to have to do your homework. When you get into the private equity, private credit world, the one thing there is the mark-to-market problem.
Yep.
You're never sure what those marks are. And look, having been chairman of a number of mutual funds who also did do private placements, the accounting firms will never sign off on valuation. What they do is they sign off on the process that you use for valuation. So they may say, they don't want to get sued for misvaluations. But going way back to my days when Julian and I worked together, this is a long time ago, we had a number of closed-end funds in South America, and they did private placements. So as chairman of the board, when we were going over values, the accountants would come in and say, the valuation used by, in those days, BE Associates, those valuation methodologies are valid, but they never signed off on the valuation itself.
Smart.
Bill Priest, brilliant. Thank you so much, folks. Out on Twitter, out on LinkedIn, free cash flow and shareholder yield. DiCaprio will do the movie. It's looking 2027 for Bill Priest classic free cash flow. Can't say enough about that effort. Can't say enough as well about our news in New York City. John Tucker.
All right, Tom, Paul, and Lisa, White House officials, they're still trying to ease concerns about the thousands of drone sightings that have been reported in New Jersey and other parts of the Northeast. National Security spokesman John Kirby says there's no reason for alarm.
Our assessment at this stage is that the activity represents commercial, hobbyist, law enforcement drones, all operating legally and lawfully, and or civilian aviation aircraft.
Kirby says the FBI followed up on 100 tips out of the more than 5,000 it's received in recent weeks. President-elect Trump says he thinks the White House knows more than it's saying.
They know where it came from and where it went. And for some reason, they don't want to comment. And I think they'd be better off saying what it is. Our military knows and our president knows. And for some reason, they want to keep people in suspense.
The president-elect says he doesn't think it's the enemy, but he suggested his New Jersey golf course could be a target, saying they're flying very close to Bedminster, New Jersey. At a wide-ranging news conference at Mar-a-Lago, President-elect Trump also discussed his pick to lead the Department of Health and Human Services, Robert F. Kennedy, Jr.
I think he's going to be much less radical than you would think. I think he's got a very open mind, or I wouldn't have put him there. He's going to be very much less radical. But there are problems. I mean, we don't do as well as a lot of other nations.
Well, Senator Mark Wayne Mullins said after their meeting that he plans to vote yes and that Kennedy does support the polio vaccine 100%. Israeli officials say a ceasefire in Gaza is a more realistic prospect than at any time in the past year, suggesting a long way to deal to free hostages and boost aid to the beleaguered territory could be close. Their optimism has been reflected in recent comments by the Prime Minister, Benjamin Netanyahu's senior cabinet members. There's been no official comment from the Hamas side. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, and Lisa.
John, thanks so much. Paul, I'm looking at Wal-Mart. Price to free cash flow, 19 times. It's ballooned in the last, call it 14 months, from 11 times to 19 times free cash flow.
Nice.
Like they're growing free cash flow, but the stock is just up and away in your beautiful Bentonville balloon.
Stock up 80% year to date. Tom, this is a small cap stock. This is a company that's got a $755 billion market cap, up 80% this year. Again, the PE multiple on the January 25 earnings, 38 times.
You know, 106. They bring in $673 million in revenue, 2/3 of $1 trillion. Down to net income 20. You know, it's a margin, 3% business, which you'd expect. Cash from operations is 40 gajillion. They spent $22 billion on capex. They get free cash flow of $17 billion. They don't know what to do with.
They don't know what to. It's just extraordinary business. And what I find amazing about Walmart is they have competed against Amazon.com.
Bill Priest in on free cash flow from New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks falling as traders take in some more economic data, including strong U.S. retail sales data, a report on industrial production that fell for a third month in November, and this all comes ahead of the Fed's decision on interest rates and its forecasts. So we have the Nasdaq down 0.3%, 62 points. The Dow down 0.5%, 260 points. The S&P 500 down 0.4%, 23 points. The two-year yield 4.25%. That's little change. The yield on the 10-year 4.39%, and that is little changed. To currencies, the Bloomberg Dollar Spot Index is little changed. We have the Japanese yen up 0.3% at 153.68 against the dollar. The euro's weaker, the British pound stronger. We have Bitcoin up above 100,000. Shares of Pfizer up more than 3%. This is after forecasting 2025 revenue in line with estimates. And then after closing after a record high yesterday, shares of Broadcom, they're falling. They're down more than 4%. And shares of Nvidia, checking in with those, they're down more than 2.5%. And finally, a company making news, it's Starbucks. The union representing its baristas, well, they voted to authorize a strike, and this comes ahead of the final stages of bargaining over contract terms. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. It is one of the jewel of notes, formerly with Lehman Brothers, literally iconic at Lehman Brothers. High Frequency Economics is Carl Weinberg, and it's a brilliant international note that beautifully goes through yield internationally and folds it in to economic analysis. Dr. Weinberg joins us today from somewhere, it's like north, they have snow. Oof. They don't have 6 inches of rain, they have 6 feet of snow. Carl, good morning. I look at Germany politically challenged, France politically challenged. Christian Friedland has made Canada politically challenged. How fragile is the global political economy this morning?
Hi, good morning, Tom. All the arguments are over budgets as well. Chrystia Freeland left because she disagreed with budget priorities with the prime minister, who seemed to be putting re-election over building a war chest for a potential battle with the U.S. over tariffs. The French budget is right at the core of the RNP's objection to what President Macron and his centrist policies have put together. And in Germany, there's a huge debate about the use of fiscal stimulus right now, which is very challenged because Germany also has to adapt to higher energy prices, and they also have to figure out how to defend themselves a little bit better in the case of a Trump administration. So it's all about money, Tom. It's all about money.
With immense respect for your decades of work back to financial crisis at the IMF, how does Carl Weinberg interpret American exceptionalism? They got problems, we're different. How do you treat that?
I don't know if we're so different, Tom. You look at the projections for the budget and the good article on Bloomberg this morning about the challenges facing the incoming Treasury Secretary. We have to brace up for our own confrontation with the budget realities, and that's not going to be pretty, either politically or economically, when it happens.
Carl, we're going to hear from the Fed tomorrow. What do you expect? What do you think we should hear? How should we think about this?
Well, we got to think about it. Me and a lot of other economists are of the view that the economy doesn't really need a rate cut now. So either we're going to get one or we're not. But I've been, in preparing myself to kind of imagine what's going on around the table at the FOMC, I dragged out a copy of the transcript of the December 2016 FOMC meeting. And it was such a good meeting. Stanley Fischer was there, keeping everybody honest. But the point was that the decision, the incoming Trump administration's economic promises and theories and assertions as to what it was going to do, they were discussed vigorously at that meeting. And almost every member admitted that they adjusted their dot to take account of the incoming government's fiscal plans, even though publicly their view was, as it is today, that they're not going to do anything based on expected policy changes, but they can only work on actual changes.
Carl,
so I'm of the view we don't need a rate cut. The view they're going to do the right thing, Tom, and that we might be surprised tomorrow afternoon.
Carl Weinberg, you got a China note. You've been on the China watch for decades as well. Do they have the wherewithal to get back to 5% GDP? Are you optimistic about a Beijing workout?
Well, right now, they don't have the right thread that they need to follow in order to get themselves out of what's wrong in China. The symptoms that I'm seeing there, imploding money supply, M1, a drop in bank lending, a depreciation of the currency, probable capital flight, drop in foreign direct investment. This sounds more like the Latin American countries that I used to look after in the 1980s than it does sound like China in the early part of the 20th century. They've got a massive national insolvency in two places. In the property sector, we know about that, and in the provincial government sector, we don't talk too much about that. But with those insolvencies in hand, pumping liquidity into the economy is not going to fix it. They need to do restructuring of the balance sheet. They need to pump capital.
Paul, Stan Fisher, Carl Weinberg mentions, used to lecture me. You take a log chart and you take the percentage change in the percent. The China yield has moved from 2.1% just before you got your organic Thanksgiving beast. Okay, 2.1%. It plunged and cratered yesterday to 1.72%. The 10-year Chinese yield, Paul, has dropped 18%.
Yep.
Since just before Thanksgiving.
Unreal, exactly right. I mean, Carl, is there, from your perspective, as you think about the Chinese economy and its impact on the global economy, is there that political will in China to do more?
Well, we're untested, aren't we? This is a government that hasn't had to confront, anything like this. You can take that drop in bond yields that you just discussed and infer from that people aren't putting money in banks. And that's what the M1 deposit base is telling us, that people are taking money out of their banks. People who can take it out of the country probably are cheapening the currency, and other people are putting them into bonds because they feel that government bonds will be safe. This is an existential crisis for China, similar to 2008 in the United States, and they're not doing the right thing to fix what's wrong.
Carl, what are you writing about? What's your theme into next year? What's the high-frequency economics message?
Well, there's going to be two messages, all right? Number one is that even if there were no changes in fiscal policy and government policy, the economy is probably going to run slower in 2025 than it did in 2024, which is a good thing because we're at roughly full employment and we're at roughly full capacity utilization, and we need that space. And the second thing I know I'm going to be writing about is how Trump administration policies are going to challenge that in every dimension. They're going to challenge price stability and capacity use with tariffs. They're going to challenge fiscal stability with tax cuts to begin with and possible spending cuts later, but we don't know how that's going to work out. And they're going to try to reduce the labor force by deporting non-documented workers. So you put that together, there's going to be a lot of stresses on the U.S. economy moving forward, and I think I'm going to spend a lot of time about that.
See you in January. Carl Weinberg, thank you so much for the high-frequency economics. Paul, the theme today, that jump to a 6% yield by T. Rowe Price.
Yeah, that gets your attention.
Arif got our attention.
It sure does. Because we've been sitting in here, when you look at the 10-year Treasury, Tom, kind of in that 4 to 4.5% kind of range for quite a bit of time here, and a lot of folks are saying that's probably okay, and the economic data supports that. But boy, what needs to change for that yield to push materially higher there?
And I was surprised. I thought we were at 6% yield more recently, but we weren't.
No.
2000.
Oof.
Summer of 2000.
Good time.
Matt Scannell was in a dorm room at Deerfield. Then he ended up at Georgetown. Put an album out. Everybody's like, yeah, independent album. Nobody cares. Had 4 major hits off it. Vertical Horizon, when we had a 6% yield last.